Good evening, students. We are back again with a topic, continuation of our topic, performance measurement and performance evaluation. In last three classes on this topic, we have understood different financial as well as non-financial measures of performance of a company and how these performance measurement techniques or tools help the top management in improving its performance further. That also we have seen. We have understood the concept of benchmarking. We understood various models which are in the form of non-financial performance measures. And we also understood how the financial performance measurement and evaluation is a challenging task in not-for-profit organization, that is NGOs, charitable organizations, and so on. What are the practical difficulties or bottlenecks which are encountered by the management at the time of doing performance evaluation in a non-profit making organization? We have studied in the last class. Thereafter, we started with case studies. And as I told you, this topic is very important from the exam point of view. In the syllabus itself, it has a weightage of around 30 to 35% as per the syllabus. So 1/3 of the paper you can say is based on the case studies relating to performance, measurement and evaluation. And therefore, so much importance to this topic. And this is the practice in today's times also. The consistent performance of an organization any time will matter. If organization has performed well in a particular year, that's a good thing. But there has to be consistent performance years after years. And this consistency should be maintained all the time to the satisfaction of stakeholders. So everyone in the business who is associated with the business should get benefit, should get value addition out of the business operations of the enterprise. And therefore this topic, performance measurement and evaluation. We had studied around 3 case studies, I remember, in the last class. 2 case studies were on triple bottom line and 1 case study was on EVA, that is economic value added. Triple bottom line is a non-financial performance measure, whereas EVA, economic value added, is a financial performance measure. And we had understood how in real life these techniques are used by the top management for performance evaluation. So in continuation of our case study, today also we are going to learn this topic more in depth, with more analysis with the help of case studies. So 3 case studies today I have brought for you. 1 case study is return on investment. Don't go by the number. The order may not be, the case study number may not be in the same order. So this is case study number 6, but for us we are doing it on chronological sequence number 4. So after doing 2 case studies on triple bottom line, 1 case study on EVA, now let us do 1 case study on ROI, return on investment. Now, since some time has passed since we spoke about ROI, let us now recap or revise what we learned in ROI. ROI is return on investment, and every organization will try to maximize its ROI, that is profit available to the business. While calculating ROI, we consider earning before interest and tax. That means we do not penalize the divisional manager for the factors which are beyond his control. We always take into account factors within his control for which he is responsible for profitability of the enterprise. If business manager is not responsible for certain factors, why do we penalize him for those factors? Why do we take into account those factors? We generally do not take into account factors for which divisional manager is not responsible while calculating ROI. So ROI is always calculated on the basis of earning before interest and tax. It is EBIT divided by operating capital employed. All of you know the formula. I had written also in the window separately that yes, ROI is equal to EBIT upon operating capital employed multiplied by 100. And operating capital employed generally we take as average capital employed, opening capital employed plus closing capital employed divided by 2. So we have ROI equal to EBIT upon operating capital employed multiplied by 100. And we compare the ROI of 2 divisions, division A and division B. And then we say division A has a higher ROI. That means that divisional manager is bringing more contribution. It is bringing additional profit to the organization than division B manager. And accordingly, the incentive scheme for the division is decided. All of you are aware that ROI is often taken as the base for deciding incentives or bonus to be paid to the divisional managers. The performance bonus, now most of the organizations today have the concept of performance bonus or performance linked incentive. Well, then you are entitled to bonus or an incentive. And most of the managers are on this variable component of remuneration. We have two components of remuneration, fixed component and variable component. In many organizations nowadays, fixed component may not be that lucrative, may be normal as per the scale, as per the grade, but variable component of remuneration is much higher, and that is linked with the performance. So now you understand how performance measurement and evaluation is important in the real organizational life, where incentive of the manager is calculated based on the performance. And this performance is reflected in various performance indicators. Right now we are understanding ROI, return on investment, as a performance measurement tool. What happens in case of ROI when you are measuring or evaluating the performance of two managers? A manager who knows that yes, ROI is the basis for calculation of bonus, for calculation of incentive, will ensure that he does not invest in certain assets which are required for future benefit of the company. I repeat, it may so happen that the manager may not invest in certain assets which are required, which are urgently required for future benefit of the company and for profitability of the division. Ideally speaking, the manager must invest in energy conservation equipments or must invest in pollution control equipments. They are in the long-term interest of the company and its stakeholders, but purposely knowing that ROI is the basis for performance evaluation, it may so happen that the manager may not invest in these equipments. Now, what is the implication? What do you mean by manager not investing? Obviously, when he does not invest in any of these assets which are required to be invested, he will save on investment in capital assets. And to that extent, his operating assets will come down. To that extent, at the end of the year, the capital employed portion will come down. All of you understand, you all are finance students, understand calculations very well. When you say that ROI is the basis for performance evaluation, obviously EBIT upon capital employed is the formula. If I reduce my denominator, that is capital employed, I reduce, obviously my ROI will improve. All of you are finance students, so you appreciate this. Your numerator remains the same, denominator you reduce, so obviously your quotient, that is the final answer, ROI, will improve. So ROI will improve if investment in divisional asset is reduced. So what does this manager do? Manager does not invest in certain assets. When he is required to invest, he is required to increase his capital base. He does not increase the capital base for the selfish reason of improving the ROI, or rather projecting the improved ROI. The other manager who may be sincere enough, who is working in the long-term interest of the company, may invest in the assets in his division, the assets which are required to be purchased. He may purchase those assets so that it will improve the efficiency, it will improve the working performance of the division and so on. But to that extent, the capital base will improve. Capital base will increase. If denominator increases and if you try to calculate ROI on a higher capital base, I repeat, if you try to calculate ROI on a higher capital base, higher denominator, obviously return on investment will show a lower picture, a lower figure. Because now the denominator is very high, capital investment is huge. So uske upar whatever profit we work out in the numerator and percentage of ROI, that is always reduced. So ye sab number ka khel hai. This is all number game, right? In order to project the better image of the division and thereby the divisional manager, one of the divisional managers does not invest in the asset. Second divisional manager invests in the asset and thereby shows less ROI. So obviously the one who shows less ROI does not get rewarded because of the incentive scheme. So incentive scheme is well documented. It is well defined, rather predetermined before the beginning of the year. And at the time of performance appraisal, performance review, the concerned manager is already told about his KRAs, key result areas, his expectations, and so on. So that time the incentive scheme is shared with him. He knows very well that this incentive scheme will be operational for the next entire financial year. Now, John Buchke, knowing this, there may be a tendency, an attitude on the part of therefore the crooked manager, manipulative manager. I'm using purposely the word crooked manager, manipulative manager. The tendency or the attitude may be to reduce the investment in productive assets and reduce the capital base, thereby projecting a better ROI. Now, certainly this practice is totally wrong. It is criticized and condemned, but anyway, it gets camouflaged, it gets suppressed. Nobody comes to know about this tendency. What is reflected on the face of the performance is yes, ROI is higher. Right? And to that extent, therefore, we also discussed in our theoretical understanding that ROI suffers from one important drawback. It suffers from one important limitation, and that is it is based on financial statements. It is based on figure of capital employed, which is subject to change, which is subject to manipulations, alterations, adjustments. These words are self-explanatory. Adjustments, manipulations, window dressing. So there are tendencies and attitude on the part of divisional managers. So how reliable picture this ROI will give is a question mark. To what extent ROI will give reliable picture is a question mark. We had also understood that when you calculate ROI, we take in the numerator profit which is controllable profit. Controllable profit means profit which is well within the control of a divisional manager. So profit which is outside his control, that means the factors which are beyond his control, maybe the cost factors, are eliminated, are not considered, are not taken into account while calculating controllable profit. So controllable profit will consist of revenue generated by the division out of its business profit, out of its business operations. So revenue generated by the division out of its business operations minus the controllable costs of the business division, and that will give the profit which is controllable profit. Now before we go into the case, I would like to highlight certain figures or certain terms in my separate sheet. So let us see the separate sheet wherein we jot down some of the factors. And these factors are absolutely important. So you can also, before we start doing a case study, you can write ROI is equal to, we all have understood this, ROI is equal to EBIT, earning before interest and tax, divided by capital employed. This is once again to revise the formula, capital employed, and of course multiplied by 100. This is formula number 1. EBIT divided by capital employed into 100. This is point of learning number 1. You must know how to calculate ROI. When you calculate EBIT, we take into account controllable profit. And controllable profit is equal to, these are not formulae, but these are expressions which are in the form of an understanding. Controllable profit is nothing but the total profit made by the division, right, without considering profit of the division out of business operations. Profit of the division out of business operations. That means revenue generated by the division out of its business operations minus controllable cost. That is revenue of the division, revenue generated minus controllable costs. Minus controllable costs. Controllable costs are costs which are within control of the divisional manager, taking example of rent, electricity, establishment cost, all types of expenses, administrative expenses, overheads relating to production, relating to administration, etc., etc. All controllable cost, cost of operations that is deducted from revenue to arrive at profit of the division. That means most important point to be noted is obviously head office cost which is allocated. Allocated head office cost is not taken into account. Allocated head office cost not considered. You must remember these points. Allocated head office cost not considered. For the purpose of segmental reporting, you have studied in financial reporting, segmental reporting, that is reporting the profitability of each division. reporting the profitability of each division, that is segmental reporting. Right? At that time, the management, that is the head office, may allocate certain costs, may allocate certain costs on the division, for which divisional manager is not responsible. These are typically common costs, head office cost, or cost of common services which are shared by all the division. Head office costs are nothing but costs which are related to common services, cost of common services. Common services, what we call shared services, common shared services. So allocated head office costs are nothing but costs of common shared services, and they are not taken into account. They are ignored, rather, I would say, while calculating controllable profit. If you have any doubt in conceptual understanding of ROI, you can ask. We had understood ROI in detail, but that time it was on a theoretical note. Now we are doing a case study where you are going to apply this concept of ROI in a given case and then comment upon. It's not just calculation of ROI, not just calculation of incentive or bonus which is paid to the employees, but also the limitations of ROI, whether ROI is a foolproof measure of performance or does it suffer from certain limitations. And our immediate response is it yes does suffer from certain limitation, because the tendency of some of the divisional managers may be to manipulate the figures, manipulate the calculations so as to project higher ROI, and that tendency should be curbed. So that is the limitation of ROI. This I am writing it as a pointer at the back of your mind. Tendency of divisional managers, DMs I am writing, tendency of divisional managers to project higher ROI by manipulating the numbers, the figures. Tendency on the part of divisional managers to project higher ROI by manipulating the numbers. So they know that this is the basis for calculation of bonus or performance incentive. Right? So we have understood a broad guideline of how to calculate ROI, what are its pros and cons when it comes as a performance measurement tool in the hands of top management. Therefore, if you recollect, I had said that when you are attempting any question of case study, right, on any of these topics, you should always give a holistic approach. You should always give an overall perspective. One should understand overall perspective. While answering any question on case study, you should take into account overall perspective. That is holistic approach. You can even take down this holistic approach. Holistic approach. An overall approach, overall perspective. While answering, I am writing these terms in bits and pieces so that they are in front of you. Never say that ROI is totally bad, totally condemned, criticized. No, not at all. ROI is certainly one of the performance measurement tools in the hands of management for monitoring and evaluating the performance. And the results are kept at the back of mind of the top management. You don't discount this technique. This technique is extremely important. So we take into account the results of this technique. Management keeps the results at the back of mind. But my point is we cannot base our decision solely, exclusively on the basis of ROI. The top management cannot firm up its opinion, cannot come to a final conclusion exclusively on the basis of ROI. That is my point. So, whenever you comment in any case study, you have to have a holistic approach or an overall perspective that has to be taken into account. Also, the concept of goal congruence has to be kept in mind. So when we talk about tendency of divisional managers to project higher ROI by manipulating the figures, that is one of the approaches or tendencies. It may so happen that concept of goal congruence may be taken for a toss. So goal congruence has to be kept in mind. What is goal congruence? This also we discussed in transfer pricing topic. We will discuss this again. Concept of goal congruence is nothing but strategizing everything in the interest of the company as a whole. I repeat, strategizing every action in the interest of overall company as a whole. That means divisional manager should not adopt any of the strategies which are tangent to the organizational objectives. The objectives of divisional manager should be aligned with the objectives of the organization as a whole. The objectives of the divisional manager should always be aligned with the overall objectives of the organization as a whole. Right? Divisional managers' objectives cannot be tangent to the objectives of the top management. That is called concept of goal congruence. Now, what happens in typical practical scenario like this, where ROI is the basis of performance evaluation, a divisional manager also may have a tendency to take certain decisions which are in the interest of the division, may not be in the interest of the overall organization. This example I gave you, that yes, the manager is supposed to invest in, for example, pollution control equipments or in energy conservation projects, but instead of investing into so much of equipment, he decides to defer such investments to subsequent years. Defer, D-E-F-E-R, defer, that is delay. He decides to postpone investment in such productive assets to next year, so that at least this year, the projections of ROI which are made to the top management, they will show a rosy picture, they will show a better picture, and he is then entitled to higher and higher incentive or bonus. So that should not be the tendency. I am writing the tendency is, first point is this, which you should keep in mind, manipulating the figures, and second is goal congruence. This may be taken for a toss. So this is not correct, and therefore overall perspective is very important. I have finished giving you a brief or an overview of this topic ROI. Since we are now taking a case on ROI, I will read through the case and thereafter we will analyze the case. We will understand. If you have any questions, that link is open to you. You can ask the questions in the link. Here is the case on ROI. Arvind Limited. I will read this case. Reading the case minutely, reading between the lines is extremely important. Arvind Limited first opened its door in 1990 for business, and now it is a major supplier of metals, right, supporting over a dozen different industries and employs experts to support each industry. Right? So, metals are required by practically everyone, different types of metallic units required by different industries, and there is a supplier who supplies these capital goods, particularly metals. Metals, when you talk about, it also includes all types of metals, that is alloys, steel parts, iron, and so on. Now, obviously, the customers or the industries which use these metals, they include wood and panel products, right? Window panels or any of the French window manufacturers, they all require these metals. So these include wood and panel product manufacturing, earth products, site furnishings, commercial and residential construction. So wherever there is a construction activity going on, furnishing activity or interior designing, decoration, these metals are required for manufacturing various items of furniture, etc. It has grown through devotion to its customers, dedication to the customer service, and commitment to quality products. This line is also important because you understand the top management's philosophy. Top management has been always devoting its energy, I would say, to its customer-centric or customer-focused kind of approach used by top management, dedication to customer service and commitment to quality products. Now, this information is required, what we call preamble or what we call introduction to any case. So now we divide it into a paragraph. Company has two divisions, Division Y and Division D. Each division works as an investment center separately. Salary of each divisional manager is ₹7,20,000 per annum. Key figures you can note down as and when you are reading a case. What you should do is, as a matter of good practice, good discipline, right? In your answer paper or in your writing pad or paper, you must write the key figures so that you don't have to run through the case and its contents again and again. So wherever there is a figure, ultimately we as analysis of cost we are doing. So we will be using these figures. So whether relevant or not relevant at this point of time, when first reading you are doing of any case, you must jot down the numbers which are there in the case. So these numbers we will use it eventually, right? When we are analyzing the cost. So each divisional manager is getting a salary of 7,20,000 per annum with addition of annual performance related bonus. Yes, annual performance related bonus based on divisional return on ROI, return on investment. That is based on divisional return on investment, ROI. So performance bonus is linked with ROI. A minimum ROI of 12% per annum is expected to be achieved by each divisional manager. 12% to ROI लाना ही है. If a manager only achieves 12% target, he will not be rewarded as any bonus. 12% to it is a bare minimum. Every manager is paid salary, and that is 7,20,000 rupees is paid for bringing a contribution or achieving a target ROI of 12%. The target ROI of 12% has to be achieved. No compromise on that. But if he achieves anything beyond 12%, for every 1% whole, word whole is very important again. Whole means integer. Whole का मतलब integer. In integer, in full number. For every 1% point increase. For every 1% point above 12%, which the division achieves for the year, a bonus equal to 3% of annual salary will be paid. Bonus equal to 3% of annual salary paid, subject to a maximum bonus of 20% of annual salary. Subject to a maximum bonus of 20% of annual salary. That means every manager who brings ROI equal to greater than 12%, it has to be in integers. That means it has to be in the whole points, in the whole decimals. So if the manager brings ROI of 13%, that means 1% ज़्यादा ROI लाया, then he is entitled to a bonus equal to 3% of the annual salary which is paid, and subject to a maximum bonus of 20% of annual salary. Annual salary, you know, is 7,20,000. If at this moment only you do 7,20,000 का 20%, 7,20,000 का 20%, that comes to 1,44,000. Please do it on the calculator. 20% of 7,20,000. Annual salary is 7,20,000. So 20% of 7,20,000 comes to 1,44,000. So bonus paid to any manager should not exceed 1,44,000. Figures belonging to the year ended 31st March 19 are given below. So you are given some financial data for two divisions, Division Y and Division D. Let us keep this figure. Those who want can take a pic, a picture, a photo of this sheet, because then you can start solving it and you can get the figure of ROI. ROI calculation will be based on this particular financial data. So all the students who are listening to this, you can take a quick peek of this, right? And this you can use it as a base for doing the calculation of ROI. I will read through the numbers. Division Y and Division D. All figures are rupees in thousand. You have revenue figure. Division Y is generating revenue of 29,000. Division D is generating revenue of 17,400. So Division D's revenue is less, right? Profit earned by Division Y is obviously higher, 5290. Profit earned by Division D is 3940. Let's head office cost. Head office costs are allocated costs. Costs over which divisional manager has no control. That is head office cost, 2530. And Division D, 1368. Right? Now, this is something which is allocated by the top management based on some predetermined factors, and therefore we don't question them. We don't, at a divisional level, we don't question these figures. We assume that these figures are correct, what is loaded, what is allocated to the division. And therefore the net profit of Division Y is 2760 vis-a-vis net profit of Division D is 2572. So that way profitability is more or less same, I would say, little higher. Division Y has a profit which is little higher than Division D. Non-current assets you can see is 19,520. That is our fixed assets or productive assets, and whereas for division D it is 29,960. Look at the quantum or value of non-current assets. You can say nearly 1.5 times, right? The value of division D assets, non-current assets, is nearly 1.5 times total value of non-current assets of division Y. Look at the current assets, cash, inventory and trade receivables. Cash, inventory and trade receivables. Division Y, it is 4960. Division D is 6520. Right? So again, in current assets also, division D is holding large amount of current asset. I think based on whatever discussion I had prior to commencement of this case, I told you some divisions ensure that their capital investment, or rather their investment in assets, what we call capital employed, is kept purposely at a lower figure, so that ROI projected is at a higher figure. So here it looks, I have not completely read the case, but what is apparent, what is obvious, what is apparent, what is obvious from these figures quickly, the thought which comes to my mind quickly is the quantum of assets, the value of assets with division D is much higher than that of division Y. तो ऐसे तो नहीं है कि division Y manager is trying to suppress its capital base, suppress its asset base so as to project higher ROI. Let us see, as we read ahead, we will come to know. Trade payables. Trade payable is portrayed at a higher figure for division Y and lower figure for division D. Now, in every respect, division Y is trying to show the picture of capital base as low as possible. All of you also are clear in your mind that if the trade payable, what is trade payable? Trade payable are creditors, suppliers, trade payable, bills payable, etc. Current liability. If current liability is shown more by any particular division, if current liability is shown more by any division, capital base is reduced. And if capital base is reduced, if the capital employed is reduced, better it is for the division, because division can portray a higher ROI. जितना denominator कम होगा, उतना ROI ज़्यादा project होगा. Understand like this. All these thoughts are coming to my mind as and when I'm reading the case. So when you read the case in the exam, you should always think beyond the numbers. That was the point I was telling you or emphasizing on that day also. You just should not take the figures on the face value. Never take the figures on the face value. Try to read these numbers and try to read beyond these numbers. Right? So as this division Y is showing a higher trade payable, that means current liability ज़्यादा दिखाने की कोशिश कर रहे हैं. Why? Because they want to suppress capital base. They want to suppress the capital employed so that they can show higher ROI. So now I think it gels well. G-E-L-S, gels. Gels means it obviously meets the conditions what I was thinking of, and that is assets are shown purposely low, whereas liability is shown more. So obviously capital base is reduced. Lower the capital base, lower the capital employed, higher the ROI. The entire thing fits well in the model. What in the model I said, business model, which division Y manager had thought of or had planned of. Very crooked intention. Manager responsible name is given high and phi. Purposely it is given high means it's okay. It's successful. The manager who is manipulative high and manager who is phi is not so manipulative, straightforward. Some names are given, funny names are given. Okay, so that you will remember this case. During financial year 18-19, phi manager. Now remember, phi manager is second division, which is showing everything properly, proper transparency in its disclosures. That is what I would say. Phi manager is having all transparency in its divisional performance and divisional projections. So phi manager, who is manager of division D, invested 13.6 million in new equipment, including an advanced cutting machine, which will increase the productivity by 10% per annum. See the approach of divisional manager D. He invested in new equipment during the year 18-19. So अभी समझ में आ रहा है the figure of productive assets, that is capital assets, fixed assets, non-current assets, which are shown at a higher figure in case of division D, is nothing but a culmination of purchase of these equipments, new equipments including advanced cutting machine. And obviously that is to improve the productivity. So we would say this phi manager of division D is thinking in the interest of the organization. Productivity, if it increases, obviously the profitability will improve. That is his genuine intention, and therefore he is investing in such assets. On the other hand, Hi, the manager of division Y, has made no investment during the year. Look at his tendency, no investment by Hi. He has not made any investment during the year. Even its computer system needs updation. Now this is something which is not done. Computer system requires updation. That means you need to be well updated with the current technology, current techniques, current software to be installed so that the efficiency in its operation will improve. But instead of doing that, division Y manager has decided, division Y manager, that is who is Hi, he has decided not to invest in any such assets, capital assets, so that purposely capital employed is kept at a lower level. And if capital employed is low, better ROI can be projected. Division Y's manager has already delayed the payment of its suppliers. Look at this. Due to limited cash and bank balance. Although the cash balance of division Y is still better than that of division D. Actually, cash position of division Y is better. But when you look at current assets in totality, current assets together, that is cash, inventory, receivables, cash and bank balance, all this you take together, obviously the cash and bank balance position of division Y is not so comfortable as compared to division D. Right? And not only that, manager of division Y has already delayed the payment of its supplier. Now what happens when you delay the payment of suppliers? Your creditors balance will always be high. If you delay the payment of suppliers, your trade payable will be high. If trade payable is high, obviously capital base will be low. See, all these efforts are taken to show the lower capital base, show higher trade payable, show lower asset, and a combined effect of both these strategies. A combined effect of both these strategies is showing a lower capital base, showing the lower base of capital asset or capital employed. एसेट को कम दिखाओ और लायबिलिटी को ज्यादा पोर्ट्रे करो. उससे क्या होगा? कैपिटल एसेट और रादर व्हाट वी कॉल इट कैपिटल एम्प्लॉयड इज पोर्ट्रेड एट अ लोअर फिगर, एंड लोअर द कैपिटल एम्प्लॉयड, हायर द ROI. That is the tendency. All types of tactics this manager who is high has used it. Now three things are asked. Number one, for each division compute ROI. This is the first thing. Compute ROI for year ended 31st March 2019 is one thing. Justify the figures used in your calculation. That means you have to show the workings. Point number one. Point number two, you have to compute the bonus of each manager for the year ended 31st March 19. Bonus of each manager for the year 31st March 19. And third, discuss whether ROI provides justifiable basis for computing the bonuses of managers and the problems arising from its use at Arvind Limited for the year ended 31st March 19. So this is a qualitative discussion. First two are quantitative. You have to compute ROI, you have to compute bonus of each manager. So दोनों managers का ROI calculate करना पड़ेगा, दोनों managers का, दोनों divisions का ROI calculate करना पड़ेगा, दोनों managers का bonus calculate करना पड़ेगा, and you have to then come to a conclusion whether this system of rewarding the manager based on ROI, this system of rewarding the manager based on ROI, is it fair? FAIR. Is it fair? Is it just? Is it giving proper justice, right, to the KRA's key result areas of each divisional manager? That is what you have to comment. That means ROI as a performance measurement tool. How effective is this tool? That you have to comment, taking shelter of or taking help of this case study. So in isolation, you don't have to deduct, you have to discuss with the help of this case study. So what we do is first we calculate the first two parts, that is computing ROI and computing the bonus of each manager. So I once again take you back to the figures, and from there we will learn, and thereafter we can do the calculations separately also. First we understand from this sheet. All of you have completely understood the case. पहले पार्ट पे आपको ROI कैलकुलेट करना है फॉर ईच डिवीजन. नेक्स्ट पार्ट में व्हाट इज द बोनस और परफॉर्मेंस इंसेंटिव पेएबल टू ईच मैनेजर. And third part, you have to calculate, you have to comment on whether ROI is a reliable performance measure or not. What kind of difficulties may pose to the top management or to the divisional managers when it is used, if it is used in the organization as a performance measurement tool. So let's look at this figure calculation of ROI. Return on investment, I wrote the formula, is EBIT minus EBIT is earning before interest and tax, right? That is based on operational results of the division, right? While calculating EBIT, do not consider the allocated fixed cost, allocated cost of the head office, because they are beyond control of management. So how much is controllable profit? There are two profit figures. One is 5290 and other one is 2760. These are two figures of profit. Which figure you feel is controllable profit? Yes, a 1 minute pause I take. Yes, correct. The figure of 5290 K means 1000. Figures are rupees in 1000. Figure of 5290 K is a controllable profit, because this is the profit before allocating head office cost, before deducting head office cost. So if you say that manager of division Y is getting a profit of only 2760, that is not fair, right? From his business operations, from his day-to-day business operations, he had generated a profit of 5290, and therefore division Y manager should, when you are appraising, evaluating his performance, you should consider controllable profit of 5290 in the numerator. So in the numerator, we will have controllable profit, which is 5290 for division Y. Same logic for division D. So it will be 3940. That will be controllable profit. Now divided by, we have to take into account the capital investment, particularly the capital employed. Capital employed, the formula is fixed assets plus current assets minus current liabilities. I repeat, fixed assets plus current assets minus current liabilities. So you have fixed assets, that is non-current asset 19,520, plus current assets, that is 4,960, right? Minus trade payable 5,920. Do it on the calculator. Non-current assets 19,520 plus 4,960 minus 5,920. Same way you do it for division D, and that is 29,960 non-current assets plus current assets 6520 minus trade payable 2,800. So that will give you capital employed. Capital employed is fixed assets plus current assets minus current liabilities. So this capital employed will go in the denominator and controllable profit will go in the numerator. So 5290 divided by capital employed into 100 will give you obviously the figure of ROI. Now let us look at the calculations which are done below this case study itself. The calculations which are done. Calculations are in front of you. See whether you understand these calculations. Controllable profit is rupees 5290K. Controllable profit is rupees 5290, which I had highlighted in the data. Then we have net assets. Net assets is nothing but capital employed. Capital employed is investment in non-current assets plus investment in current assets minus trade payable. That will give you net assets. Net assets are also called capital employed. Capital employed can be calculated as share capital plus reserves plus long-term debt. Capital employed is calculated as share capital plus reserves plus long-term debt, or it can also be taken as fixed assets plus current assets minus current liabilities. Both ways we can calculate capital employed. Now if you do controllable profit 5290 divided by 18,560 into 100, you get 28.5%. So you can show the workings over here in the calculation. 5290 divided by 18,560 bracket multiplied by 100. This is how the calculation, and see whether you are getting this calculation. See whatever I wrote just now, whether you are getting this figure. Just see. 5290 is controllable profit divided by Net assets 18,560. So you can do it on the calculator. Please keep the calculator, proper 12-digit calculator with you when you are doing the calculations. 5290 divided by 18,560 multiplied by 100. So you get 28.5% as the answer. 28.5% is the ROI for division Y. और division D का same manner, controllable profit is 3940, which is that first line what I had highlighted, controllable profit for division D 3940. Net assets is nothing but capital employed. So investment in fixed assets 29,960. K का मतलब 1000. All of you understand by this time. K means 1000. So investment in fixed assets, non-current assets. Investments in current assets 6520. And minus trade liability, trade payable, that is 2,800. So thereby the capital employed consists of 33,680K. 33,680K. Thousand. Right? And now if you divide controllable profit of division D by capital employed, you get 11.7% as the ROI. See the calculations. 3940 divided by 33,680. That is asset. Controllable profit divided by investment in net assets multiplied by 100. So you have ROI of 11.7%. Take the calculations again on the calculator. Every one of you must make use of this 12-digit proper calculator. Very essential. 3940 divided by, that is controllable profit, divided by capital employed 33,680 into 100. That gives you 11.70%. All of you can see 11.70%. That is what is the profit ROI of division D. Now the picture is in front of you, and all finance students, you can understand and appreciate very well that if you analyze these numbers, what we thought of while reading the case, language of the case, while looking at the numbers, I told you don't look at the numbers on the face value. Don't take it on the face value. Read beyond the numbers. Read behind the numbers. Read beyond the numbers. Read behind the numbers. And try to interpret the data. Find out the hidden meaning out of the data. So now what we thought of at the time of reading the data comes true. Obviously, division Y manager who is high is in a position to portray better ROI than division D, right? Who is portraying lower ROI. And why lower ROI? Because purposely division Y kept, manager of division Y high, kept the capital employed at lower amount, that is 18,560. And division D manager kept a capital employed figure at a higher figure of 33,680. And two strategies division Y manager adopted. Number one, he did not invest in capital assets when they were required to be invested. उसने invest नहीं किया. He did not invest in capital assets. And secondly, he deferred the payment of his suppliers, the payment to his vendors. Relationship with vendors will get adversely affected if you don't meet the suppliers' bills. For example, on time, on due date, 1 or 2 months suppliers may tolerate. One occasion supplier may consider your practical difficulty. But if it becomes a rampant practice every now and then, every cycle, every month, you are not paying the suppliers' bills on time, then suppliers will stop lending credit to you. They will stop supplying the goods on credit to you. So you are adversely, affecting the relations with the supplier, with the vendors, and they will adversely affect the future business of the company, future business of the division. So both the strategies this division Y manager has adopted, उसने एक तो asset में बहुत कम invest किया when it was warranted, when it was required, and he purposely kept his liability at a very high figure, current liability or trade payable at a very high figure, and therefore the resultant ये तो होना ही था. That is what we say, ये तो होना ही था. When you do crookedly any manipulation, any adjustment in the numbers, purposely, deliberately, intentions are fraudulent intentions, deliberate intention on the part of management. Now, on the part of divisional manager Y. All these words good English you must use in your commentary. I told you when you are writing analysis of the case, your report to the top management or report as a management consultant or an advisor, you must use polished business English. You must use polished business English in your communication. So don't just say the figure is high, figure is low, it has increased, it has decreased. Alright, these words sound well at intermediate level. Intermediate student will write this. Division Y profit or ROI is greater than division D ROI. This is higher, this is lower, this is more, this is less. This language is all right at intermediate level. At final level, you should slightly raise your standard by giving the qualitative observations and putting qualitative comments. So this is what I am teaching you through every case study. For me, explaining the numbers is not a very challenging task. For you also, understanding the numbers or calculation is not a challenge because you are final students. हर एक को समझता है ROI कैसे कैलकुलेट करना है, but how do you interpret the results? And here you can make out two strategies adopted by Division Y manager. Purposely उसने asset base बहुत कम रखा. He kept lower investment in fixed assets, productive assets, and he deferred the liability to his vendors to later date by keeping the suppliers' bills pending, by keeping the trade payable very high. Now let us understand. So first part is over. 28.5% and 11.7% is the ROI. Now let us look at the bonus calculations. Now I have written over here the commentary. So commentary is equally important to read. Let's read this commentary. Let's read this commentary. In computation of ROI of both the divisions, controllable profit has been taken into consideration. These are nothing but the notes, explanatory notes or assumptions, right? Always it is better to cite, specify the assumptions made or the explanatory notes so that it is crystal clear to the examiner what's going on in your mind. आप क्या सोच क्या रहे हो? What's going on in your mind? You must make it very open, categorically clear to the examiner in your written communication. So say that controllable profit only has been taken into consideration. The reason behind is that the head office costs are not controllable and responsibility accounting. See, जाते जाते आपने आपका knowledge भी दिखा दिया that you know the concept of responsibility accounting, which we started with. In this chapter, we started with the term responsibility accounting. So why head office costs are not taken into account? Because they are not controllable by the divisional manager, and responsibility account considers that managers should be held responsible only for the costs over which they have control. This is the basic philosophy of responsibility accounting, which is practiced in every organization, that managers who are responsible for the cost, only those costs should be taken into consideration on which they have control, for which they should be held responsible. And therefore head office costs are kept outside the purview of our calculation. ये note लिखने की जरूरत है. You must write this note categorically. That why have you ignored head office cost as allocated cost? Because they are not controllable by the divisional manager, and responsibility account supports this, not to take into account costs which are beyond control of the manager. The asset figures also depend on the same principle. That means when you don't consider the cost which is within control, which is beyond control of manager, you should also not consider asset base which is beyond control of, you should not consider asset base which is beyond control of the divisional manager. So in this case, asset base to be taken into account is only productive assets, current assets and current liability to be eliminated. That's all. If there was any asset which was imposed on the division by the head office, if there was any asset that was imposed on the division by the head office, we would have ignored that asset from calculation of capital employed. See friends, this case study will not come as it is in the exam. It is not expected to, the figures may not be repeated, but some slight modification here and there, if it comes in the exam, then you should be in a position to adapt yourself. Adapt means modify your thought process, modify your calculation. So if the additional information given in the case is that head office has invested so and so amount in the asset of a division during the year, and probably this was not within the control of the divisional manager, then obviously while calculating capital employed, that asset will not be taken into account. So whatever logic is applicable for the cost, same logic applicable for asset base also, right? So assets figures which are used also depend on the same principle. Figure of current assets and current liabilities have been taken into consideration as they are the items over which managers have complete control. So we take into account capital assets, that is fixed assets. We take into account current assets and deduct current liabilities while calculating capital employed. Please remember this. So formula for capital employed is fixed assets plus current assets minus current liabilities. We'll write this formula in our sheet which we have been continuing. So towards the end we had started writing. Here we write capital employed that is equal to fixed assets. I'm writing the short form with your permission, you all understand, plus current assets minus current liabilities. That is trade payables. That is capital employed. Can also be called as share capital plus reserves plus long-term debt. Share capital plus reserves plus long-term debt. Since in this case data is not given about share capital, reserves, etc., we have kept that outside our purview. We concentrated on fixed assets plus CA minus CL. If any figure you don't understand or if you have any difference of opinion or understanding, you can always ask the question in the link that has been provided to you. Let's go back to the case calculation again. So let us calculate the bonus. First we will read the language of the case, how to calculate bonus. The bonus is calculated like this. A minimum ROI of 12% per annum is expected to be achieved by each divisional manager. Minimum ROI of 12% per annum is expected to be achieved by each divisional manager. If a manager only achieves 12% target, then he will not be rewarded any bonus. See, now reread, once again read the paragraph relating to bonus now, because you are now doing the calculation of performance bonus. First part you completed, that was ROI calculation. Now case study पूरा तो आपने पढ़ लिया है, but second time when you are solving the second part of the question, read the case again, that part of the case again which is relevant for solving the second part. Read that part of the case again which is relevant for solving the second part. Second part is about performance bonus. So minimum ROI of 12% has to be achieved. If any manager achieves only 12%, no bonus. But if he achieves more than 12%, then for every 1% point increase, whole point increase over 12%, during the year, a bonus equal to 3% of the annual salary will be paid. And mind well, annual salary is 7,20,000. So salary of 7,20,000 per annum into 3%. So you can make out 7,20,000 into 3% karo. 7,20,000 into 3% is 21,600. 3% of annual salary is 3% of 7,20,000. That is 21,600 bonus is payable to a manager for every 1 point over and above 12 point in integers. Now, subject to a maximum bonus of 20%. So 20% of 7,20,000 is 1,44,000. 1,44,000 के ऊपर बोनस नहीं मिलेगा. रुपी 1,44,000 के ऊपर बोनस नहीं मिलेगा. But per point increase, it is 21,600, which is 3% of 7,20,000. Now all these figures, yes. नहीं, कम अगेन, ऑडियो वीडियो में क्या ब्रेक 7:30 तक. ओके, हाँ 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 हाँ, चलेगा समझा. So far it is going all right, no problem. Okay, now look at the bonus calculation. I'm on. Look at the bonus calculations now. Bonus to be paid for each percentage point. Each point I calculated just now, 7,20,000 is the annual salary multiplied by 3%, that is 21,600. 3% bonus will be paid for every point increase. 3% bonus for every point increase. 1% बढ़ा 12% के ऊपर तो 3% मिलेगा. If the actual achievement of ROI is 2% extra, then 2 3s are 6% मिलेगा. If actual increase is 3%, over and above 12%, then 9% मिलेगा, and so on. So in short, 3% for every point. So 1 point के लिए 7,20,000 annual salary into 3%, so 21,600 इतना bonus उसको मिलेगा. Alright. Now maximum bonus I said just now is 7,20,000 annual salary into 20%, that is 1,44,000. That is the maximum bonus that can be paid. Alright. So these two figures you keep at the back of your mind. When you calculate the bonus for each manager, keep these figures at the back of your mind. So 21,600 is for every percentage point increase over 12%, and maximum bonus it cannot exceed is 1,44,000. Let us look at division manager Y now. For division manager Y, ROI was 28.5%. 28.5% यानी 16 points above 12% in integers, 16 whole percent points above minimum ROI. Minimum ROI is 12%. So 12% के ऊपर कितना हो गया? 16 points हो गया. वो 0.5 ऊपर का छोड़ दो. क्यों छोड़ देना? क्योंकि whole points ही consider करना है. So ऊपर का जो 0.5 है वो छोड़ दो. Only integers. 28 minus 12 is 16 points, 16 percentage points above minimum ROI. ऐसे सब आपको लिखना पड़ेगा. 16 whole percentage points above minimum ROI. 16 whole percentage points above minimum ROI. तो per point के लिए 21,600 मिलेगा बोनस. Per point के लिए 21,600 मिलेगा. We calculated 21,600. 3% of annual salary. तो 1 point ज्यादा ROI अचीव किया तो 21,600. ये मैनेजर ने तो डिवीजन वाई मैनेजर ने तो 16 पॉइंट ज्यादा किए. 16 पॉइंट कैसे आए? 28 minus 12. 12% का तो बेंचमार्क है, 12% का तो टारगेट है. उधर तक कुछ बोनस नहीं मिलेगा. 12 के ऊपर जैसे 13वां, 14वां, 15वां like that you have ROI increase, then only you are entitled for bonus. So 28 is above 12 by 16 points. 28 is above 12 by 16 points. So 16 times 21,600 मिलेगा. That means the total bonus paid, the bonus that is payable is 3,45,600. Do the calculation yourself. 16 multiplied by 21,600, 3,45,600. But always we do the calculation saying subject to maximum bonus of rupees 1,44,000. We have also calculated there is upper ceiling also. You know, in the managerial remuneration, director's remuneration or managerial remuneration, MR, all are finance students, so you know under Companies Act, there are restrictions on the maximum amount that can be paid to a manager, to the director on the board in the form of MR, managerial remuneration. एक certain percentage के ऊपर you cannot pay remuneration to a director on the board. So here the maximum bonus is 1,44,000. And your calculation it comes to 345,600. Obviously इतना bonus तो नहीं देंगे, but at least 1,44,000 तो देना ही पड़ेगा. That is the maximum ceiling. So therefore manager will be paid the bonus of rupees 1,44,000 maximum. Into bracket maximum लिखना जरूरी है. That means you are showing to the evaluator that yes, you have understood that there is a ceiling of upper ceiling of 1,44,000 which you are applying over here, and division Y manager is entitled to a bonus of maximum ceiling, and that is 1,44,000. Let's look at now if these calculations are clear to you, we will look for division D. Now for division D, ROI is 11.7%. बदनसीब बोलेंगे. क्या बोलेंगे? बदनसीब. That is very bad luck. And bad luck because he is very sincere. Right? Had he also been manipulative like division Y manager, probably he would have portrayed better picture. Now he just short by 0.3. What a bad luck. We say, what a bad luck. He is just short by 0.4. 0.3 भी नहीं, 0.4. Why? You know, because 11.7 is short by 12 by 0.3. But 12% को भी इंसेंटिव नहीं है. 12% के ऊपर है तो there is an incentive. So that means had he earned ROI of 0.4, 0.5 and so on, probably he would have been entitled to bonus. But this is what is bad luck for division D manager, right? That's what he said. Probably sometimes the sincere work done doesn't act in favor of the manager. That is the wrong message which may go out of this case, which is not correct, right? All of you should get a very clean message, and that is, yes, you must work always in the interest of the organization, overall organization, a holistic approach. So here ROI is 11.7%. Zero incentive because 0 percentage point above minimum. 12% का टारगेट उसने क्रॉस किया ही नहीं है, and therefore bonus entitlement is nil. What a bad luck. Now you have seen there is one manager who gets bonus of 1,44,000 and there is another manager who gets bonus of nil. You have completed second part of the case study, and that is calculation of bonus payable to each manager. Remember, the first part was ROI calculation, which you did correctly. ROI is 28.5% and 11.7%. This was the first calculation. Second calculation, you did bonus paid to individual managers. If your first part is correct, then only second part will be correct. So second part is dependent on the first part. If you all have understood these calculations, now let us discuss the qualitative part. I am going to the qualitative part, which is the third question. Read the question again. Required. There are three things required in this case. Compute ROI, we have completed. Next is compute bonus, we have completed. And the third part, discuss whether ROI is a reliable measure, whether it provides justifiable basis, whether ROI provides justifiable basis for computing the bonus of managers and the problems arising from its use. What problems may arise from the use of ROI as a performance measurement tool. Both these points, in this case, whether ROI provides justifiable basis, वो discuss करना है, and what are the problems that may arise out of usage of ROI, as a performance measurement tool. You must see the question, you must read carefully. What happens is generally students don't read the question and they try to write the general comments. Based on the numbers, they write general comments. Look at this ROI of division Y is more than division D, and therefore the manager Y got more bonus than division D manager, right? Which is not fair, full stop. Over, comments are over. Now this is not fair. It is a 20 marks case study. You don't know the breakup of marks. Probably ROI computation may carry only 4 marks. Bonus calculation may carry only 4 marks. May carry, we don't know the breakup. So only 8 marks are devoted for first and second part. And out of 20 marks, probably, I don't know, probably, I'm just assuming, 12 marks may be devoted for the commentary. 12 marks may be devoted for the analytical comments or narrative comments. And that is what I told in the last class also. Whenever you are analyzing any case in this paper, strategic cost management, try to emphasize more on the analytical comments, narrative comments, narrative comments. Again and again I am using these words. Right? Please try to focus your attention on this in order to get good marks. Right? Because that may carry more weightage. And at a final stage, what is being tested on part of the students is your final CA student. So what is tested on the part of the students is whether student is analytical in his or her approach. Can he read beyond numbers? Can he read behind numbers? Behind numbers, beyond numbers. Remember my words. That is what is more relevant than during the calculation. An intermediate student can also calculate ROI, can also calculate bonus based on this ROI. Yeah? We had studied in costing, labor. We had a chapter in cost accounting on cost and management accounting as labor cost, right? Where we used to have those various plans, Halsey plan, Rowan plan, all types of performance measurement incentives, right? And we used to solve those problems. All of you will recollect what I'm talking. But now here in final, this is beyond numbers. So that means you have to identify, division Y manager's tendency seems like crooked intention, manipulative intention, looks like. And you cannot 100% blame the manager because this is not your company. You are a third party. Bear in mind, you as a management accountant, और एक चीज मैं आपको बोलता हूँ, कोई भी केस स्टडी आप एनालाइज करोगे तो उसमें you should be able to have a third party angle. A third party angle. That means you are not the promoter of this company. Point number 1. You are not an insider in this company. You are going by only the financial data which is provided to you. So always we auditors put the disclaimer, we management consultants, auditors, we always put a disclaimer in our report saying that subject to the information and explanation made available to me, subject to data made available to me, I hereby opine that, or I hereby express my view that, like this. So whenever you write a high level management report to the management committee, whenever you write a high level management report, analytical report, the management committee, particularly based on these numbers, you should put a disclaimer, sort of a disclaimer, that this analysis is exclusively on the basis of numbers or figures which are made available to you. And you are restricting your calculations only to this extent. That you must make it very clear. इससे पीछे भी और कोई number होगा which is not made available to you, probably, then you are not responsible. You are safeguarding your own interest. The management accountant or a management consultant, while giving the report, will always safeguard his own interest by giving a proper disclaimer in his management report. So, while reading the third part, you should be very careful and address each and every issue which has been asked or highlighted in the question. ऐसे न हो जाए, जाते जाते you highlight only one part of the question and second part of the question remains unanswered. ऐसे न हो जाए. That is the care you have to take while attempting every question on case study in this paper. Again and again I am saying this paper because in this paper the orientation is a case study orientation. So दो चीज पूछे हैं थर्ड पार्ट में, whether ROI provides a justifiable basis. That means is it a reliable measure? See, and another thing, the words which are not used in the question, try to incorporate those words in your approach, in your analysis. I repeat, the words which are not used, the terms which are not used in the question, try to incorporate those terms or those words in your answer. That will give a flavor to the examiner, that will give a flavor to the evaluator that yes, you are going beyond that data, beyond that particular information provided in the case. Now here the question is, does it provide a justifiable basis? See, the thought comes to my mind, what is the parallel word for justifiable basis? Is it a reliable measure, performance measure? So that reliable measure कहाँ भी use नहीं किया है. So use in your commentary the word, is ROI a reliable measure of performance? Is it a reliable tool of performance measurement? That is question number 1 you have to address. And question number 2 in the same sub question, and ये देखो and है, तो आप ये लिखते लिखते ऐसा ना हो जाए that you lose sight of the second part. Second part is problems arising from its use. Means what are the problems encountered by the management or encountered by the divisional manager per se when ROI is used as a performance measurement tool for evaluation purpose. So both things you have to highlight. All of us, we have discussed this case at length, and therefore every figure is in your mind, every piece of information is in your mind, and therefore we can look at the observations directly. Discussion points are here in front of you. I will read through these discussion points and explain wherever required. You can also ask questions. My manager is manager of division D, will not receive any bonus. पहले factual information दे देना. Always give the factual information based on your analysis. Analysis क्या बोलता है? Division D manager will not get any bonus. So say phi manager will not receive any bonus since he has not earned any point above the minimum percentage of 12. Above the minimum percent 12, he has not earned any points, reward points, and therefore reward points, and therefore no bonus will be paid. This is due to the large asset base. इसको highlight करते हैं. Large asset base on which ROI figure has been computed. All of you understand? Division D's asset base has been very high. This is because Division D has also procured one new machine during the year, and that is something added. That is something which has added to its capital employed. So total assets of Division D are almost double the total assets of Division Y. ये देखो, ये जो double है, that is quantified. Again and again I say you, when case does not say the word double, you understand that yes, almost double. Total assets of Division D have almost doubled. You quantify. Whatever data is not apparent on the face of the case, not mentioned in the annexure, exhibits, all of you understand exhibits, annexures, wherever the data is not categorically given in the annexure or exhibit, whatever data is not given, you can highlight this in your discussion points or comments. So this data is not given, this analysis you have done, so uska credit जरूर लेना इसका credit. That asset of division D is almost double the asset of division Y. ये केस में mention नहीं किया है, ये आपका reading है, आपका interpretation है, so do mention. Major reason behind this is that Division D invested around 13.6 million in new equipment during the year. If you invest so much amount, 13.6 million is a great amount. Obviously, the asset base is going to be doubled. If these investments were not made, again, that aspect also you should cover. Had this investment not been done, then the net asset would have been only 20.08. ये 20.08 कैसे आया? Let us calculate, recalculate. 13.6 माइनस करते हैं एसेट बेस से, 13.6 नेट एसेट से माइनस करते हैं, तो 33,680 is the asset base. 33,680,000 is the asset base. 33,680 is the asset base. उससे आप 1360 माइनस करो. 1360 मिलियन है. 1 million is equal to so many lakhs. So 1360 उसके ऊपर और एक 13,600 lakhs. And 13,600 lakhs is so many thousands. So to that extent, there would have been less investment in capital asset, and the answer comes to 20.08 million. 20.08 plus 13.6, you can make it 33.68. यही तो फिगर था अभी, 33.68. Just compare. See the calculation, 33.68 million, 33.68 million. So if that particular asset was not installed, probably the capital employed would have been 20.08 million, and then the ROI would have been, all this is if and but. Remember that if and but लिखना जरूरी है to fetch good marks, so that it shows your analytical approach, analytical power, that a student really has at a final stage analytical mind, that had this investment not been made by a division D manager, then your investment would have been 20.08 and ROI of division D would have been 19.62%. कैसे आएगा ये 19.62%? Let us recalculate. Now investment would have been 20.08. So let's do it. 20.08 now will come in the denominator, and controllable profit comes in the numerator. So 3940K, that is 394 million. 394 million. All of you are with me. 394 divided by that particular asset. 394 divided by 20.08 million. 394 divided by 20.08 million into 100. To do that, of course, 1962, in percentage it comes to 19.62%. So 320, we have seen that controllable profit divided by 20.08, the ROI is 19.62. If anyone has any difficulty in the calculation, please ask me. I will explain the calculation once again after the break. So I will accumulate all the questions in the link, the chat box link which is provided to you, and I will answer all of them together immediately after the break is over. So meanwhile, you gather all the questions and keep on writing in the link. So ROI would have been 19.62%. देखो 12% से कितना ऊपर हो गया? 7 points above. So 19 is about 12 by 7 points. So ऊपर का 0.62 छोड़ दो. Rounding off is not allowed because it is only for whole points. Rounding off is not allowed. It is only for whole points. So 7 multiplied by 21,600. 7 multiplied by 21,600. That comes to 1,44,000. Exactly the maximum amount of bonus. So resulting in payment of bonus of 1,44,000, because 7 into 21,600 is 1,51,200, but subject to a maximum of 1,44,000. You can't forget this. So even division D manager would have been paid 1,44,000. Still, all right, it is still less than the bonus paid to division manager. Y also was 1,44,000. That's what we calculated, no? When division manager Y also got the bonus of 1,44,000. Right. So division manager D also now would have got bonus of 1,44,000, and both the managers would have been at par. We always say something is better than nothing. And today, my manager is not getting any bonus. Had he produced ROI of 19.62%, then he would have earned bonus of 1,44,000. I think all of you are clear now on this calculation, and this we are talking in terms of if and but, if and then. If this would have happened, then he would have received the bonus. ये परफॉर्मेंस कब होता 19.62% when he would have achieved this target ROI, provided he had not invested in that new asset amounting to new equipment amounting to 13.6 million. If this amount was not invested, then he would have earned ROI of 19.62% and would have earned the bonus of 1,44,000. So can we therefore say, now these are the calculations which you are showing to the support this. So you make a paragraph over here. So in first paragraph here is said that 5 will not get any bonus, but asset of division D are double the asset of division Y, and that is because he invested in the new equipment, and had he not invested, probably the ROI would have been very high, about 12%, and then he would have earned a bonus of 1,44,000. Now we mentioned in qualitative comments, Y is being penalized for making decisions which are in the best interest of his division. Y is being penalized for making decisions which are in the best interest of his division. He is investing in the equipment, right, which is required, which is warranted, and for which he is penalized. ये कौन सा तरीका है? ये कौन सा न्याय है? That is what we say. That he is investing in the interest of his division, in the interest of the company. It is very surprising that he decided to invest where he knew that he would receive lesser bonus subsequently. उसको पक्का मालूम था, had he invested in this asset, then ROI will come down, and to that extent he will get lesser bonus. Still he invested in this because his intention is not to get the bonus, intention is to work in the interest of the division and the company both. So he acted in the best interest of the company altogether. On the other hand, what is the tendency of high manager, that is manager of division Y, has taken the benefit from the fact that he has not invested anything, though it was needed to invest in computer system updation. The most important point, see the serious point, that division Y was supposed to invest in computer system updation. Division Y was supposed to invest in the latest technology, latest software for providing better services to the stakeholders. That is the need of an hour. Every now and then organization should make a point to provide best service to the stakeholders by providing all information at a glance. Whenever there is any query raised by any of the stakeholders, the organization and its management should be responsive approach, right, to immediately respond to the query, right, and that will happen only if you have a proper MIS system, proper system software designed at your place. So computer system updation has become the need of an hour today in every organization. And division Y manager knows that it is required to be invested. In spite of that, he does not invest. In spite of that, High has not invested because he wants to take undue advantage of lower capital employed, lower asset base, so that his higher ROI is projected. Now, this is the best example of what we call suboptimal decision making. Look at this polished English word, polished business English, that is in management terms, right? It's a management jargon, suboptimal decision making. This paper, strategic cost management, we concentrate on decision making. That is at the back of mind. Decision making should always be in the best interest of the stakeholders, and we always say optimal decision making. Right? Any action plan is from the point of view of optimal. Optimal ka next best is suboptimal. Suboptimal means next best, not as optimal as best. Suboptimal. So instead of investing in computer system, manager decided to defer, DEFER, defer the decision to invest. You can use this word also. Use polished business English. Time and again I am saying the commentary. It should catch the attention of the evaluator and should immediately give him a feeling that yes, you mean business. So suboptimal decision making. That has resulted. This is the another observation. We talk about trade payables also. Chate that cannot be ignored. See, when you say the asset base has been kept low by division Y manager, asset base has been kept low by division Y manager, we are aware that not only the capital intensive assets or the fixed assets have been deferred, both are high, but trade payables are also shown at a higher figure. So division Y trade payables are over double those of division D. Division Y's trade payable are over double those of division D. Let us look at this trade payable figure in absolute rupees. Go back to the numbers and see. Here it is. Trade payable, and you can give the example also here. 5920 is Y's trade payable and 2800. 2800 twos are 28 twos are 56. 56 के ऊपर भी है 5920. कितनी liability accumulate करके रखी है देखो. Trade payable has been accumulated more than double by Y. Is it a good thing? Certainly not. Right? When you are piling on the bills of the vendors, suppliers, you are not clearing bills, honoring the bills. So current liability का मतलब ये नहीं है that you will delay their payment. You are supposed to honor their obligations on time, on due date. You are supposed to honor the obligations of your vendors on due date. That is on time. You cannot defer or delay to an inordinate delay, inordinate extent. Right? And that is shown over here by the figures. More than double is your current liability. That itself shows the crooked approach, the crooked intention. See, you may not use this word crooked, though verbally I am using this word crooked. It sounds little harsh, and therefore in written communication, गुस्सा तो आता है, तो इसके लिए use this word. But in written communication, don't use the word crooked, because that is a slightly, what should I say, unparliamentary or not very polished word, and therefore say manipulative. Say adjusting, but don't say crooked. This is only to harp on the point or to highlight the point. I am using it in my verbal communication. Right? So please don't use it in your written communication. So division Y manager has shown trade payable which are double those of division D. See, double trade payable. हर एक angle से he tried to manipulate. In part, one could expect this due to higher sales, almost 66% more than division D. Yeah, more than double means not even 200%, that is not more than 50%, almost 66% more than division D is the trade liability. And that one can say that it is because of higher sales. And if sales बढ़ गया, तो my activity level is high. If activity level is high, my trade payables are bound to increase. So one may try to wash his hand by giving such kind of an excuse. But the fact also remains that there is low cash level at division Y. Right? And therefore the trade payables are surmounting. So higher trade payable leads to reduction of net assets. If higher trade payable, reduction of net assets, the fact that Arvind Limited is rewarding high with bonus, even though relationship with suppliers may be badly affected, it is again a case of suboptimal decision. Once again, suboptimal decision. Between the two, what is important? Making payment to vendors on time is important, or spoiling relationship with them is important. Obviously, and that too for the benefit of self, for getting the bonus. Certainly all of you will agree that maintaining the relations with supplier vendor in the long-term interest of the organization is more important than looking at your selfish goals. Division Y manager is absolutely selfish and looking in the self-interest, right? And therefore trying to manipulate the figures, show higher liability, current liability, and suppress the assets. So assets are suppressed. Typically in auditing we say no, assets are suppressed and liability is inflated, so that obviously the capital employed is suppressed. Assets are suppressed, liability is inflated, so capital employed is suppressed. And what happens? You are spoiling the relations with the supplier. This is again a case of suboptimal decision. So two types of suboptimal decision this division Y manager has taken. Number one, showing higher quantum of liability, and two, suppressing the assets. I think the points are highlighted well. Jate you also calculate net profit margin, because that is one of the performance measurement criteria. It is based again on accounting measure. We discussed managerial performance measures based on accounting profit and based on economic profit. EVA is an economic measure. EVA is an economic measure, whereas accounting profit, whether it is ROI, whether it is net profit margin, is accounting profit. So jate why not calculate profit margin also? Profit margin is excluding the head office cost. Again, our principle remains the same. Excluding head office cost. Head office cost is beyond control of the divisional manager. So controllable profit we take into account and divide controllable profit by sales. So again, I take you back. Look at the answers. It comes to 18.24% for division Y and 22.64% for division D. Division Y की profitability कम आ रही है अभी as compared to division D. Division D has been in a position to bring more profit. देखा जाए तो net profit margin is more for division D. Still division D manager is deprived of bonus. ये कौन सा justice है? That is what we are asking. Asking the top management. How these calculations are done? That is how these Profit margin is calculated. Look at the figures once again, where you calculate profit 5290 divided by 29,000. 5290 divided by 29,000. So you show this profit 5290 is controllable profit divided by revenue, that is sales. So 5290 divided by 29,000. And you multiplied by 100, you get NP margin of 18.24%. 18.24%. 5290 upon 29,000. 5290 upon 29,000. Any doubt you have in calculation, you can ask. 5290 upon 29,000. This is 18.24%. Similarly, you calculate for division D, it comes to 22.64%. How is that 22.64%? Again, go back to the data for division D. Division D data again you look at. It is 3940. 3940 is the profit, controllable profit divided by revenue 17,400. So 3940 upon 17,400 is your NP margin or net profit margin, which comes to much higher figure for division D. So division D's profitability comes to much higher figure than division Y. All of you, I hope, have understood this calculation. Again, I am trying to emphasize that figures which are not apparent, which are not obvious, which are not visible, figures which are not apparent, not obvious, not very visible on the face of the data should always be highlighted in your commentary, in your analytical commentary, narrative commentary. So this 18.24 is a calculated figure. It is a derived figure. 18.24 is a derived figure, NP margin. It was not given in the original case. 22.64 is a derived figure. It is not given in the original case. So any figure which is not given originally in the case, but which is a derived figure, computed figure on your own, right, definitely attracts the attention and of the examiner, and therefore you must highlight this in your comment. Now, division D manager has made a higher profit margin. So obviously, if capital employed is ignored, division D is performing much better if capital employed is ignored. If capital employed is the base, then it is called ROI. And if sales is at the base, it is called NP margin. So between NP margin and ROI, obviously NP margin is showing a better picture for division D. So that means division D has performed better, right? But somehow it is suppressed when you calculate ROI. So now in that sense, is ROI a foolproof performance measure? No. So ROI is simply making division D manager's performance worse. Phi might feel extremely disappointed by getting nothing, and in future he may opt to postpone the investment to increase the bonus. See, slowly he may also follow the footprints. He may follow the footprints of division manager Y. Division manager D today is very honest, very sincere, but years after years, if he starts getting this kind of a feeling that he is not getting rewarded for the initiatives taken by him, he is not being rewarded for the initiatives taken by him, he is not given proper bonus recognition in the organization, either he may leave or he may continue by following the same footprints of division manager Y, and he may postpone the investment to increase the bonus, and that will adversely affect the overall interest of the company as a whole. Right? That is what is concept of whole congruence will be fully at a write-off stage or fully taken for a toss. So non-investing in new technology, that is what we are highlighting. Not investing in new technology and equipment will mean that Arvind Limited will not be kept updated with its industry changes, and its overall future competitiveness will be affected. Use as many word jargons as possible. 12 मार्क का ये एनालिसिस है. So 12 मार्क के लिए जितने मैनेजमेंट के jargon, strategic management, या studied strategic management, जितने आप यूज कर सकते हो, यूज करना. Right? You have competitive advantage. You know future competitiveness. Right? That in order, if you want to maintain future competitiveness with the competitors, right? If you want to update yourself with industry changes, that will not happen. Because Arvind Limited के लिए new technology is not available, new equipments are not available. This division manager Y is deferring all the investments to subsequent years to get higher ROI. So briefly, the use of ROI is resulting in suboptimal decision making and lack of goal congruence. ये दोनों वर्ड आप यूज करना, suboptimal decision making and lack of goal congruence. That is, what is good for the manager is not good for the company and vice versa. It is good for division manager Y, but not in the interest of the company. Right? Whereas what division manager D is doing is in the interest of the division as well as in the interest of the company also in the long term. Short term, it may not have produced the ROI, but in the long term, certainly it is in the interest. Company will be kept updated with the latest technology, latest changes, and they will be able to provide that competitive advantage over others, over other competitors over a long period of time. So somehow, the ROI as a performance measurement tool lacks in this foolproof approach, reliable approach of performance measurement, because it is resulting in suboptimal decision and lack of goal congruence. ये अच्छे वर्ड यूज करना, suboptimal decision, goal congruence, lack of goal congruence. And fortunately, Division D manager still seems to be acting for the benefit of Arvind Limited, but other manager is not. Abhi, now you can categorically say this, that it appears, it seems. See, look at this English language, seems. I'm underlining this, right? I'm underlining this, seems. I told you, no, you should use this word in your commentary, that Division D's manager seems to be acting for the benefit of the company. Why seems to be acting? Obviously, because this is what is reflected in the data that is provided to us. This company, we are not the owners of this company. This company does not belong to us. We are an outsider, so always provide a third-party view. I told you, provide a third-party approach, third-party view. So Division D manager still seems to be acting for the benefit of company, but other manager is not. Seems to be. Don't say he is not acting. ऐसे categorically किसी के ऊपर इल्जाम मत लगाना. किसी के ऊपर इल्जाम लगाना, allegation करना अच्छा नहीं है. So do not say that Division D manager is not doing like this. Don't be so assertive. Don't be so categorical. You get what I'm saying? Don't be so categorical. Don't be so assertive. थोड़ा dilute करो उसको और बोलो it seems to be acting in the interest, but Division Y manager is not. The fact that one manager is receiving a much bigger bonus than the other is not justifiable here. Certainly it is not done. This is something which we condemn. It is not done. One manager getting a higher bonus than the other, when it is not justified, that is not done. And it may result into a conflict in the long run. Both the managers, these messages spread across. Howsoever we may say, remuneration is a confidential information within the organization. I remember while working in a limited company, a professionally managed company, and that to a multinational company, always we used to sign a declaration at the beginning of every year that whatever honorarium, whatever emolument or remuneration is paid to us will not be divulged, it will not be revealed, it will not be divulged, it will not be disclosed to my fellow colleagues, to my other colleagues in the department or in the organization. I will keep this information confidential. ऐसे करके हम लोग declaration sign तो करते थे, but the fact remains that this is the real scenario in almost all the organization. There is something called grapevine. This also you are aware of, grapevine. That is something which are undercurrents. Now this we cannot use, this language we cannot use in our written communication. So I cannot write like this, grapevine, undercurrent. But I am now talking off record that yes, there is a grapevine, there are undercurrents. One manager definitely through some or the other source comes to know what is the increment percentage being given to the other manager. So if Division Y manager in this case is given a bonus of 1,44,000 and Division D manager is not given bonus at all, then this certainly will not be kept hidden for a long period of time. It छुपेगा नहीं, it will come to surface, come to highlight very soon, and if this practice continues, then it will create conflict in the long run. It will create conflict in the long run. It is not in the interest of Division Manager D. His morale and motivation will be down. A deserving manager like him may leave the organization, may look for a competitor, and may use his skill set, may use his competence, may use his talent. ये भी आप लिख सकते हो. The division manager D may leave, and use the word may. Will leave मत बोलना. There is a difference between may and will. Don't say will leave. He may leave the organization, and his skill sets, his competence, his knowledge, he may use it for the competitor. And the competitor may flourish because my asset, my company's asset, who is this skilled employee, this manager, he leaves my organization because his morale is down and he joins my competitor. And my competitor will get now a competitive advantage over me because my manager is now with him. So this is certainly disappointing for the company, especially in the situation where the division needs to work in unison. That is the concept of goal congruence. This also I will underline. All the divisions are supposed to work in unison. In unison means in conjunction with one another. I am doing like this. In conjunction with one another. All the divisions are supposed to work in conjunction with each other, in dialogue, proper dialogue, and in unison with each other. No division should be allowed to work in isolation, right? Tangent to the overall benefit of the company as a whole. Friends, this was a detailed case study on ROI, which we have completed. And I'm sure all of you would have got not only the calculations out of this case study, but also points which I highlighted as fine-tuning, what we call fine-tuning of those points, how to write the answers of case study questions in the exam, right? And how to make our answer, make our analytical comments more and more qualitative in nature. So therefore, I am now going down again and writing something on the whiteboard that is in the form of a document. Here you have the notes. These are our notes which we are taking down on our Word document. So here you say, while answering a question on case study analysis must have two things. One, qualitative comments. Qualitative, analytical comments. Both important. Analytical comments. This you must take down. Case study analysis must always have qualitative or analytical comments, which will carry more weightage, more than the calculation at the final stage, at the final CS stage. Calculations are important, but qualitative analytical comments are more important. Qualitative analytical narrative comments. Qualitative analytical and narrative comments. And second, figures which are not apparent. Take down this. Figures which are not obvious. Not apparent. On the face of a case, must be derived independently, calculated independently, and highlighted in the comments. These 2 points which I have highlighted now on the whiteboard, these 2 comments will definitely help you in answering each and every question in the case study paper. And only such deserving comments will get due recognition, will get due acknowledgement. Remember my words. Figures which are not obvious, which are not apparent on the face of a case. जो फिगर दिए नहीं है केस में, if we can bring two figures together, and we finance experts, finance specialization chartered accountants, we are very good in bringing 2 figures and doing an analysis by calculating ratios. So rather than commenting on absolute figures which are already given in the case, why not derive something which is independently? Why not calculate some figures which are independent figures based on, of course, the data given in the case? So that is my point. Figures which are not obvious, not apparent on the face of a case must be derived or calculated independently and highlighted in the comments. Can you tell me in this case which are the two figures which we have calculated on our own which are not given over here? One is NP margin. All of you remember. In this case, for example, it is NP margin, net profit margin. This was not given in the margin calculate karo. No case specified that you calculate ROI. NP margin तो पूछा ही नहीं था. But we calculated NP margin on our own to highlight a point, and we highlighted this NP margin in our analytical comments. And we said that had this NP margin be taken into account, probably Division D manager's performance would have been highlighted. That was the point we made using this NP margin. So this NP margin was not on the face of the figure, not on the face of the case, but still be derived. Now this should click means it should appeal to you, occur to you while reading the case, while analyzing the case. Right? Whenever you read the case, don't take the figures on the face value. These thoughts should appeal to you. They should click you. They should occur to you. And that will happen by repeated practice of reading and solving the cases. And so, a lot of efforts will have to be put in. It's not just understanding the concepts, my dear students. This is at final stage you are being evaluated. So, not just the conceptual understanding. You are not writing a short note on ROI or limitations of ROI, but you are applying this concept in a given case. And therefore, all these efforts we are making in making you understand. So, which are the two figures we highlighted over here? One was NP margin. Go up in the case analysis and you will find yourself. One was this NP margin, net profit as a percentage of sale, which is 18.24% and 22.64%. ये हमने खुद से calculate किया जब पूछा नहीं था. And second thing, yes, see, trade payables is double that of division Y. Tendency on the part of division Y manager to show higher trade payable by not paying the supplier bill. ये भी दूसरा double करके जो figure में नहीं दिया था. We have generalized this based on the information. And third thing, had investment not been made, then probably revised ROI would have been so and so. So all these, what we call is if and but if then analysis. You have studied in strategic cost management. One more concept called, I recollect one word was a what if analysis. Yes, what if analysis. Try to bring this what if analysis in your case study approach. So had this investment in new asset not been taken into account, probably then ROI would have been. Had this investment not been made, ROI would have been. This is what if analysis. So this what if analysis also you project in your commentary. So this is again an additional information which we are giving in this case study. So I am writing all three learning points from this. These are the three things which we have highlighted. For example, NP margin, then doubling of trade creditors, doubling of trade payables, doubling of trade payables for Y limited, for Y division. And third thing is what if analysis. What if analysis. Remember this. Case study में ये होना बहुत जरूरी है. What if analysis. Could it strike me? I'm highlighting what if because it is a part of this paper on the strategic cost management. What if analysis. If you have such, and इसको ही बोलते हैं holistic approach, comprehensive approach in case study analysis, which I had highlighted, holistic approach, overall perspective, holistic approach. This will certainly be called as overall or holistic approach. Okay, friends, we take a 10 minutes break and we will assemble after 10 minutes and continue with the next case study. Thank you. Friends, we will look at another case study relating to strategic performance management. This is the PPP model typically which is used private-public partnership. You might have heard of triple P, PPP model, which is used in public-private partnership, performance evaluation in not-for-profit concern. Highlight this. Study is on value for money, VFM framework, which we learned for not-for-profit organizations. Let's read, just to recap what we learned in this not-for-profit concern. Whenever there is a performance evaluation that takes place for a non-profit making organization, there are two parameters which are taken into account. Number one, value for money framework. Value for money framework talks about economy, efficiency and effectiveness. Economy, efficiency and effectiveness. To recollect what we had learned, economy is whether the operations of the organization, not-for-profit organization, are kept under control or not. Whether operations are well within control or not. And operations are well within the standard cost, the budgeted cost. That means minimal cost to be maintained, cost of operations. That is economy in operations, maintaining operating cost. Next is efficiency. That is maximum output at minimum input, at minimum cost. Maximum output at minimum input or minimum cost. That is called efficiency. So are we in a position to provide better service to our customers by making minimum investment in cost and also making optimal use of resources. So optimal use of resources in such a manner that it brings value added service to the customer. So that is what is efficiency. And the third one is effectiveness. Effectiveness is reflected in achievement of organizational goals and the mission. Is mission which is defined for the organization, are objectives being met or not? Is mission being complied with, completed or not? That is what is the effectiveness part. So value for money framework revolves around three words: economy, efficiency and effectiveness. This is the model that is used for evaluating performance of a non-profit making organization. Second thing we have talked about is adapted balance scorecard. Adapted balance scorecard, which is used for not-for-profit organization. Adapted balance scorecard will have first on the top priority, and that is customer. Unlike other balance scorecard where financial perspective or financial measures occupy a predominant portion, here in case of a NGO or NPO, non-profit organization, the customer perspective occupies a predominant importance. So customer is at the center, at the focus. So customer perspective comes first, then comes financial perspective, then third is internal process perspective. We don't call internal business, it is internal process. And fourth one is innovation and growth perspective. Innovation and growth. Unlike learning and growth, innovation and learning perspective we talk about. So these are two things which we must highlight whenever there is a case study on value for money diagram or a framework, or whenever there is a case study on NGO, we must highlight these 2 points. VFM framework, value for money framework, and second, adapted balance scorecard. Of course, besides other performance measures which are used, like utilization, optimal utilization of resources, value added service to the customer, etc. etc. So based on this line, let us read the case on performance evaluation in not-for-profit concern. There is a hospital which is running. You remember I mentioned to you not-for-profit organization examples are charitable organization, a hospital, NGO, which are working for philanthropic cause, working for social cause, right? And providing value-added service to the customers. Here customers means the people who are beneficiaries. Typical word that we use in case of a NGO or NPO is beneficiary. Value-added service to the beneficiary is more important than anything else. And the funds are raised from patrons, from members, from donors. So is organization fulfilling the expectations of donors, patrons, members who have supplied the funds? And are these funds being appropriated for the productive purpose? That means for the purpose for which they were originally meant. And that is what we question in case of non-profit organization. Ultimately, there has to be responsibility accounting. There has to be accountability, responsibility accounting in case of NPOs as well to the stakeholders. And stakeholders comprise of providers of funds, suppliers of funds, and generating return, not in terms of ROI, but in transaction level to these donors. Right? And as important as providing value added to the beneficiary. So आप simultaneously discuss करते रहो beneficiary how value added service you provide, and secondly whether the purpose for which funds are given as donation, whether these funds are appropriated, utilized for a proper purpose or not. Whenever the case study comes on NPO or non-profit organization, you also discuss the practical difficulties or bottlenecks which are encountered by the top management in evaluating the performance. If you recollect, that day we had discussed the most important bottleneck is quantification of performance measures. The performance measures, what we are talking about, the tangible benefits, what we are talking about for a beneficiary, it is difficult to quantify. What is the satisfaction level of patients in a hospital? Is patient satisfied about the service provided by the hospital? That cannot be quantified in monetary terms. So quantification of performance measure becomes a dicey issue, becomes a challenging task in case of non-profit organization. Second point we discussed was multiplicity of objectives. So many objectives overlap one another and there may be lack of prioritization. Which objective is more important than the other while serving the benefit, while serving the overall beneficiary, community of beneficiaries. So that is again a dicey issue, or you can say a challenging task. And we always have exploitation or utilization of resources, optimal utilization of resources at the back of mind. That may not be taken care of. Sometimes it may so happen that utilization of funds may be in order to satisfy the donors. Just to comply with the requirements, the trustees of a charitable organization may tend to spend money for a particular cause, even if that much amount is not warranted, that much amount is not needed. Still, they may keep on spending money for that purpose, just because if you achieve the target in terms of amount spent for that purpose, then in the next phase or next cycle, you will receive the donation amount. So many times the donations or charities which are given by these donors, they are with a conditional donations, that you must use this donation amount for a right cause, and that too completely. The amount should be exhausted. If you spend so much of target, then only you will get next cycle of donation. So in order to prove that we have spent that amount, whether required or not required, the trustees may, again we are using the word may tend to spend that amount for the purpose which is not required. So this is called utilization of funds for the purpose which is not required. These are some of the drawbacks which every time may not be there, but certainly cannot be overlooked or ignored. These drawbacks may not be there every time in every non-profit organization. But as a management consultant or management advisor, I cannot overlook, I cannot ignore these points when I am given the assignment of looking into the benefits of particular non-profit organization to beneficiary. Consultancy assignment, when I do, I will have to read between the lines and I have to go beyond the numbers as well, the financial data. Let us look at this case and try to read between the lines. There is a 4-care hospital which is running under private-public partnership, that is triple P model. You know, nowadays some background is required when you read the case. Private-public partnership is a model which is designed by the government, wherein for all long-duration infrastructure projects, I repeat, long-duration infrastructure projects, government may not be in a position to invest so much of funds because gestation period is long. funds are blocked for a long period of time. And therefore, money may be blocked, amount may be blocked for a long period of time. Government may not have intention to spend that much of amount for such a long period of time. Not only that, government may not have so much of funds. So obviously there is a model called private-public partnership where private players, private companies who have enough of funds and who are thinking of starting such kind of business venture, they can invest jointly and they can always take the responsibility of developing the property and ensuring that it is finally transferred, the ownership is transferred after a few years to them. So that revenue model they have to generate and they have to assure, of course, to the government as well. Typical public-private partnership model, providing treatment for non-communicable diseases. Now, APCO Hospitals Limited is a private partner which runs a chain of hospitals on profit basis in major cities in India. The public partner is state government. Forcare Hospital is a not-for-profit hospital. When you read a case, immediately the point will come to your mind, not-for-profit, oh, that means value for money framework. If the answer doesn't contain reference to VFM framework, then obviously answer will not get any credit points. Right? There has to have VFM framework. There has to have practical bottlenecks, difficulties, adapted balance scorecard. All these thoughts will come to your mind the moment you read not-for-profit hospital. Next, private partner is to invest in upgrading and equipping the facility and responsible for operation management and service delivery. That's what I said. Operational part will be taken care of the private player. Government has to provide the physical space. Land belongs to government and therefore land will be provided by the government on which the property will be set up, will be constructed. Other infrastructure is as is where is condition. Provide support to facilities, hospital amenities, etc. Private partner assumes entire responsibility for a full range of investment operation and maintenance functions. So day-to-day management, maintenance of the hospital, additional investment into various equipments, operation theatres, etc. that will be done by the hospital. But land will be provided, all support facilities, amenities will be provided by government. So that is how this PPP model works. Private partner has the authority to make daily management decisions. Of course, that is there. And hospital is funded to a great extent by the state government. Paisa to state government ka hai. And fixed level of funding is received from government each year out of state budgetary allocation. Right? Providing hospital services in the country, in the state is the prime function. And therefore, in the state budget also, funds are earmarked or allocated for this purpose. It is up to the hospital to allocate this fund to different areas such as doctors, other staff salary, medicines, and all other costs required to run the hospital. Right? The objectives are specified. So the mission, vision, you will be given in a typical case study. What are the 3 E's? That is also highlighted over here. The hospital objectives are as under. To give prompt access to high quality medical treatment for the patients. Obviously, the purpose for which patients are admitted to a hospital, they should go back after a few days after proper recovery and 100% satisfaction. So high quality medical treatment is provided to them. Provide free treatment to poor patients in line with government policy of inclusive development. All of you are aware of inclusive growth or inclusive development slogan of the government of India also, where we provide these facilities to even masses, people below the poverty line. So free treatment as much as possible, that has to be incorporated in your revenue budget. That you may not get any revenue from the patient, poor patients, but still it is all right. You are for social cause. Third, to provide value for money. I told you about this VFM framework. For the taxpayer, value for money for the taxpayer measured by 3 E's framework. What are the 3 E's? Economy, efficiency, and effectiveness. So everything is specified. If the case study highlights everything, that means you have an adequate clue in the case study itself that these are things on which your knowledge is tested. And fourth, to contribute to medical science by developing innovative ways to deliver treatment to patients. Again, the word innovation has come. So here that adapted balance scorecard will come into picture. Right? All these thoughts will come in your mind. Adapted balance scorecard, where innovation is more important than just the growth. Growth is all right, but it is innovation and learning. Keep on continuously learning, educating training your staff, medical staff, nurses, doctors, etc., and bring out innovative ways of conducting the surgeries, treating the diseases of the patients, providing service, value-added service to the patients, wow effect for the patients, so on and so forth. So all these are innovative practices. So ये 4 objectives है हॉस्पिटल के. 4 objectives वापस आपके याद में रहने चाहिए. So keep at the back of your mind. Access to high quality medical treatment for patients. Medical quality treatment, quality treatment has to be given. Free treatment to poor patients. 3 E's. And fourth one is innovation. Now, these are 4 objectives. So you have to now, when you answer the case study questions, you have to highlight on these 4 objectives. Are these objectives being met or not? That is most important, and that is effectiveness. Right? Except select surgeries, all services are free for poor patients that are below the poverty line, BPL card holders. 40% beds are reserved for poor patients and free outpatient department services to poor. Free outpatient department. There is a department called OPD, outpatient department, services to patient, and that is free of cost. CT scan and MRI diagnostics are free for poor patients. Subsidized rates for others. So this hospital is really set up with a noble cause, social cause, and they are providing free services to the poor patients below the poverty line. Nearly 40% beds are reserved. These MRI, CT scan diagnostics are also free of cost, and very nominal fees are charged to others also. Separate OPD department caters to these poor people. Forcare Hospital also runs a generic medical medicine shop inside the hospital premises, which sells medicines to all patients at discount ranging from 40% to 56%. The only shop of this kind in the city. Generally, you will find all the medical shops, they sell the medicines at retail prices. They sell the pharmaceutical products at retail prices, final medicines, tablets at retail prices. But here is the shop, medical shop, medicine shop, which is there within the hospital premises and which is providing or supplying medicines at concessional prices, discount ranging from 40 to 56%, such a heavy discount. WHO has agreed to provide financial and technical support to the neonatal care unit. There is a separate unit, neonatal care unit, and our WHO has agreed to provide financial and technical support. The hospital enabled it to obtain 5 accreditation certificates from various leading authorities on different aspects of hospital management. All of you must understand the word accreditation. Accreditation means certification. Right? There is a certification received by the hospital from 5 different agencies, 5 different authorities that yes, they are up to the mark, up to the benchmark, up to the standards which are laid down. And by whosoever, maybe the internal standards, maybe the external standards of the government, maybe WHO standards. So hospital has obtained 5 certificates, accreditation certificates from acknowledgement from 5 authorities that it has complied with all the hygiene requirements, regulations, etc. Feedback is taken from each inpatient about the quality of service provided by the hospital, and the satisfaction level is taken in 1 to 10 point scale. So whosoever the customer, in this case the patient, gets admitted to the hospital, after he is cured and after he goes back, his feedback is taken to the extent of satisfaction level on scale of 1 to 10 points. 1 being least satisfied and 10 represents totally satisfied. So this is something called feedback, which is always there in not-for-profit organization, because satisfaction level is more important of the patient. In a recent meeting of the managing committee of the hospital, discussions were held about inadequate performance measurement system. अभी issue highlight करो. हर एक केस में कुछ ना कुछ issue है. Issue means concern. So this is the concern. At managing committee meeting of the hospital, they highlighted that there is inadequate performance measurement system. This is how we come into picture. We as chartered accountants, we as management consultants come into picture. Right? As we got this advisory assignment to give the advice to the NGO, to this hospital. Inadequate performance measurement system in place to assess whether the hospital is achieving its objectives. हम लोगों ने 4 objectives देखे which were highlighted in the beginning itself, and somehow the management is of the opinion that it is not in a position to achieve these objectives, and insufficient attention is given to the importance of non-financial performance indicators. Somehow financial performance indicators are all right, but non-financial performance indicators, like for example, training perspective, internal process perspective, what we discussed in balance scorecard, they are not given adequate importance. Customer perspective, not given adequate importance. A four-member team consisting of a performance management expert and three senior doctors was created to give their advice in these aspects. Obviously, it's a technical field hospital. Therefore, in the advisory team, you must have doctors because they are the people who understand the business in and out. And also, of course, a third party, a management consultant, a management expert. A four-member team was formed. This four-member team met with doctors, other stakeholders at length and breadth, and some of the conversations were as below. Very interesting conversations. You must read this. This case study reflected in November 19 question paper. And most of these case studies are new case studies which are designed specifically and which probably same to same language you may not come across, but you get some clue or hint after reading the case. See Dr. A, what she said. I think the hospital always deliver value for money. We have always achieved our total financial budgets. Financial budgets we have achieved. Costs are kept under control. Revenue targets which are led for the hospital are also achieved. Cost is kept under control and revenue targets are achieved. So we have delivered value for money. See, there is a sort of hint here, value for money framework. That is what you have to highlight, value for money. EFM framework here. So according to him, because we are achieving the targets of revenue and targets of cost, probably we are in a position to provide value for money. This is Dr. A's contention. Dr. B says, we work here much longer hours than doctors in other hospitals, often without being paid for working overtime. These are all personal issues which also come on the surface. See, you have set up a team for what purpose? For assessing the non-financial performance measures and relooking at the existing measures. But instead of that, all the other things come on the surface. That is whether we are working for longer hours. Now, this is not warranted. This is something which is an important point for Dr. B. But yes, not very essential when you are talking about performance measures. Dr. C, there is not enough government and private partner funding to recruit more doctors and paramedical staff. This, more doctors, more paramedical staff is appointed. The situation will not improve. In fact, it will worsen because there will be a lot of pressure on the existing doctors. Right now, during pandemic situation, during this COVID situation, all of us, we are every day watching on the TV also that most of the hospitals are undergoing this particular problem of inadequate number of doctors, specialists, paramedical staff, and doctors are working day and night, right? Save the patients and ensure that the recovery rate goes up. But there has to be adequate government support in terms of funding and also private partner funding. So that is not happening according to Dr. C. Dr. D says number of outpatients has increased considerably. Yeah, in a contagious diseases or like this condition, corona for example, this number of patients are increasing day by day. So earlier an outpatient had to wait for an average period of 2 hours and 20 minutes. We call it waiting time. Probably in a quantitative performance measurement, you would have learned queuing theory. Queuing, queuing theory. How long a customer waits in the queue. Whether a customer going to the bank waiting in the queue. If you remember, a few years back, there were situations where customer had to stand in the queue for depositing the check in the bank, for withdrawing amount from the bank, and there used to be long queues in the bank. You will find, or even for that matter, payment of utility bills like electricity bill, telephone bill. There used to be long queues. You might be small at that time, but you might be school going. That time the online transactions had not gathered momentum. But now in last couple of years, you have seen the online transactions have gathered so much of pace and momentum that practically everyone is doing online, mobile banking, net banking, and therefore we don't have to stand in the long queues in the bank. There is no queue at all. All my banking requirements are taken care of at the click of a key that is on the desktop or on the smartphone. But that time the situation was different. Same way in hospital also, they are saying that patients have to wait in the long queue, and earlier 2 hours 20 minutes waiting time, now it has been raised to 3 hours because sufficient number of doctors etc. are not there. The number of patients also have increased. So four observations, points of deliberation which they mentioned in the discussion meeting. senior doctor K, who is a senior doctor, he said, I do not know how much time we spent developing innovative ways to deliver treatment to the patients, though this, as I said, was asked in November 19 exam. Inpatient H has said incompetent paramedical staff. He is talking about directly allegation on incompetent paramedical staff, poor quality of food and bed linen, the hygiene part. And staff M brings out another issue. Management undermines our role in running the hospital. Overall, there is a typical chaos, confusion, and also the low morale and motivation, I would say, among the staff members, paramedical staff, doctors, nurses, etc., etc. This is what you gather as a student. To read this case for the first time, you get this kind of impression, and that seems to be correct also, that something is going wrong somewhere in this hospital. The level of customer satisfaction is not at its peak. That objective somehow is not met. So recent performance data of the hospital vis-a-vis national average is given to you. So this is the performance data of the hospital. National average of other PPP run hospitals, the number of doctors are 76 on an average. This 4-care hospital has 80 doctors. So वैसे तो अच्छे हैं. On an average, you are employing more number of doctors than average. Average doctors overtime paid. Other hospitals is 160. So what one of the doctors said is correct. This hospital doesn't pay so much of overtime to the doctors. Right? Maybe doctors feel they are exploited, they are taken for granted. Average doctor's salary, including the overtime as per budget, is 1,20,000 in this hospital. In other average hospitals, it is 1,25,000. Now, these financials certainly are disturbing. These financials are disturbing. And therefore, one must read these figures very carefully and minutely in light of the comments made by the doctors. Average satisfaction rating of inpatients. In general, in other PPP hospitals, it is 9. Whereas in this hospital, the satisfaction level is 6. This is called inter-firm comparison. In business concern, we call it inter-firm comparison. We compare the performance of one business unit, a profit-making business unit, with the competitor, which is the best one in the industry, or what we call industry benchmark or industry average. So industry average satisfaction is 9, and all customers overall are happy in a PPP mode. What happens is it's not a 100% government hospital, it is PPP model, and therefore there is a maintenance also, hygiene, etc. taken care of by the private player, and therefore it's a combined synergy effect, what we call in mergers acquisition, synergy that is brought in by PPP model. So average satisfaction is 9 in other hospitals, but look at this hospital, the average satisfaction is only 6. Number of inpatients treated is only 6,300 on an average, but this hospital, so many patients are coming, 8,300. So large number of patients visiting this hospital and for treatment. So obviously the queuing theory, what we say for waiting period in the queue, is obviously more. One of the doctors did point out this. We come down and look at some more financials. Number of patients readmitted for treatment of the same ailment within shortest period of time after discharge from the hospital. See, this is a concern or an alarming area. In other hospitals, it is only 128. The 128 patients are readmitted. See, sometimes after you treat a patient and send that patient home after giving him a discharge, again he comes back to the same hospital. Number of such cases are only 128 on an average. But this hospital, number of patients who are readmitted are 627. That itself shows deteriorating quality of service provided to the patient. Deterioration, use polished business English words. Use polished business English words. Deterioration in the quality of service provided to the patients. Right? That is why same patients come again and again. 627. Average staff satisfaction rating. Their satisfaction is equally important. Here staff is totally demotivated. That's what we have seen. Overall 0% represents totally dissatisfied and 100% represents totally satisfied. So as you can make out, in other hospitals, the satisfaction level of the staff members is 86%. This hospital, it is 16%. All the figures are alarming. That is, they are worrying. Number of outpatients treated, that is 63,000 in case of other hospitals. this hospital is taking care of 76 more number of patients, large number of patients. This goes in line with the increasing number of patients, more number of patients treated. Obviously, burden or pressure is going to be there. That's it. The case study gets over here with lot of data. Case study पढ़ने के बाद आपको क्या पता चला? Number one, all these tabular data which I showed you, right? That is point to be referred to every now and then in your narrative commentary. Point number one. Point number two, you will talk about the doctor's deliberations and the committee members' deliberations amongst themselves. Right? Number three, you will talk about the solution, just concerns and problems you cannot highlight. Remember, as a management advisor, you should always give solution also in the problem. You cannot just highlight the issues or the concerns. Concerns are there. That is why you are appointed. So keep at the back of your mind value for money framework, BFM framework and adapted balance scorecard. हम लोगों को concept भूलने नहीं है. See, ये केस पढ़ते पढ़ते ऐसा ना हो जाए my attention is digressed. Attention gets shifted to this case and I forget about these two important concepts or models. ऐसा ना हो जाए. So keep in mind this is not for profit organization. So value for money framework has to be made use of, has to be referred to and has to be applied. Value for money framework has to be applied, has to be referred to and has to be made use of. And second is adapted balance scorecard also has to be used and applied in this case. That at the back of your mind while looking at the data, while looking at the deliberations. Look at the questions which are asked in the case. There are questions. Number one, explain why non-financial performance measures or indicators are particularly important to measure the performance of not-for-profit organizations such as care hospitals. Why financial performance measures are not that important? They are important, but not that important in an NPO. In NPO, non-financial performance measures are more important because of those factors which we discussed. The difficulties encountered by the management, multiplicity of objectives, quantification of performance measures is a difficult task, utilization of funds, again for the appropriate purpose may be questioned, proper utilization, optimal allocation of funds for various purposes, so on and so forth. All those difficulties, that is answer to question number one. Quickly it should come to your mind. Evaluate whether the forecast hospital is delivering value for money. तो इसमें आप BFM framework discuss करोगे for each of the components of value for money framework. तो आपको ये तीन components पकड़ के बैठना है: economy, efficiency and effectiveness. See how the questions are indicative. Questions in the case study are not difficult. They are indicative rather. Indicative means what you are expected to write, that is indicated properly. They are not vague. Questions asked in the case study are not vague. They are indicative of what you are expected to write. In the first part, why non-financial performance indicators are important. That means we will highlight the bottlenecks or difficulties encountered while measuring the performance in NPO. Second thing is value for money framework. You will evaluate. Evaluate means just you will not talk in theoretical terms about economy, efficiency, effectiveness. That you will specify what is that. But you will apply that also. How it is applicable in the given case. And third one is a separate question altogether. CEO of the hospital intends to introduce a nominal fee for outpatient treatment given to poor patients. He intends to introduce a nominal fee for outpatient treatment given to poor patients. आज free of cost treatment हो रही है उनकी, but CEO feels थोड़ा उनको अभी charge करना चाहिए on a subsidized basis or nominal fee, and remove the subsidized rate of CT scan and MR diagnostic for other patients in order to achieve its objective in a better way. See, obviously, the first thought which comes to your mind is, as a CEO, how can I improve the ROI of a hospital? How we can improve the profitability of the hospital, right? So many patients, no doubt, are taking the treatment. Number of patients are more than what they are treated in general in other average hospitals. All right. But the profitability is not at a very high level because lot of charitable, service being provided to poor patients and also other patients. Poor patients are being provided service free of cost, all treatment. And the other patients are given the CT scan and MRI at concessional rate or subsidized rate. उसको भी regular rate apply करना चाहिए and remove the subsidy and provide some nominal fee for the patient, charge nominal fee for the poor patients. ये दो proposal CEO के हैं. You have to evaluate the proposal of the CEO. So this is a question. You have to evaluate the proposal of the CEO. All of you have understood these three questions. So immediately we start doing the mapping in our mind. Mapping in our mind. I will increase the font size of this, and then we will highlight in our separate whiteboard sheet. First we will read this approach, and thereafter we will highlight this in our whiteboard sheet. I put it on a higher font. Clarity in reading. I told you about the first part of the question. Why non-financial performance measures are more important in an NPO or in a hospital. So that is what we have to highlight. Factors are given. Write this. Same data which is given in the case you can reproduce in the beginning to give some introduction or a preamble, what we call preamble or introduction, but keep a practice of highlighting or underlining keep on underlining the keywords that you use in the analysis of a case. So here you will speak about the introduction part which all of you now are aware, you have already read. That is, Forcare Hospital has been formed in a private-public partnership to provide better healthcare to public, focus on poorer sections of the society. Healthcare service is provided for free except for select surgeries. Sufficient portion of its capacity, hospital beds, is reserved entirely for below poverty line. The generic medicines are provided at discounted price to make them more affordable. सब अच्छी चीज कर रही है hospital. That it is providing concessional rate, concessional rate for certain treatments or certain medicines to general public, and to general public, that is others, and for poor people providing all facilities free of cost. A certain percentage, 40% of the capacity is reserved for people below the poverty line. That is also a good sign. And WHO has decided to fund its neonatal unit. That's also a good sign. And there is some interest shown by WHO in this hospital. All the more with all this information, it can be summarized that this hospital has been formed for not for profit objective. So one thing is very certain and proved that it is not for profit. Its objective is not to make money, make profit, but provide as much service as possible, attending to a social cause. So immediately we will highlight the word social cause. जो case में word नहीं है, that you will highlight. I have given the basic roadmap to all of you. But words which are not in the case, we will highlight. This hospital is set up for a social cause, for providing quality health care to economically poor sections of the society. Forcare Hospital has been formed in partnership with APCO hospitals and state government. That is private-public partnership. State government has provided physical space, all that what you read, not repeated. Aware of the modus operandi, the mechanism, that daily management decisions are handled by the private partner, and space, etc. is provided by the government. Financial measures alone are not enough. See, that's what we say. Government has provided substantial funding facilities to the hospital. It owes a fiduciary responsibility of reporting financial measures to its stakeholders. We discuss the word fiduciary responsibility. So this needs to be highlighted in your answer. Something which is not given in the case, this if you highlight, it will attract the attention. Is what I was saying. So fiduciary responsibility, that means responsibility accounting. Ultimately, when government has given so much in terms of free space, that is the land, in terms of investment in some facilities, substantial funding done by the government. So obviously, therefore, the onus, onus, the responsibility is in the nature of fiduciary responsibility of reporting the financial measures to its stakeholders, government in this case. Stakeholder is nothing but government. Since government has funded. At the same time, financial measures alone are not enough. Financial measures are required, but they are not enough, right, to assess the performance of not-for-profit organization. So due to its objective of public service, the word public service, again highlight, who are into public service, social cause, that's what we say. Is again highlighted. These keywords I highlight in our answer, which you also will highlight in your answer at the time of writing the exam. Measurement of appropriate non-financial metrics are equally important. So due to objective of public service, since you are accountable to government, that is the major stakeholder here, non-financial measures are equally important. And why? What are the reasons? Now those four difficulties which are encountered, which we had understood in theory, now you will quantify. We will highlight. Benefits cannot be quantified. First difficulty or bottleneck encountered by the hospital. Care hospital essentially provides public healthcare service to the economically weaker sections of the society. Political, legal and social reasons, not-for-profit organizations like this hospital cannot be shut down merely for not being economically or financially viable. Sometimes you have to continue in this particular activity even if you are not making adequate profit. So this is the point we highlight. Shut cannot be shut because you are providing service to the patients. And therefore, financial measures are less relevant. You cannot shut the hospital. Financial measures are not that important. ROI, maintaining profitability is important, but not as much as satisfaction level of our beneficiaries, satisfaction level of our patients. So due to its non-financial objective, appropriate non-financial measures become more important. For example, benefit of saving lives cannot be quantified in financial terms. Yahi to point hai. Benefits of saving lives. If someone's life is saved, what tangible benefit it will bring to him and his family members cannot be quantified in financial terms. So we surrender over here and we say that yes, that is why non-financial measures are more important. Everything cannot be quantified in monetary terms. Benefits may accrue over a long term. That also we discussed. That expenditure incurred in 1 year may yield benefits over several years. Right? So that matching concept of matching cost with revenue. Cost to incur in year 1, but tangible benefits may arise or may emerge in subsequent years, more than 1 year also, several years. Intensive care unit investment may be made in ICU facility and that may accrue for multiple years. So neonatal care unit have been given financial and technical support from WHO, which will give long-term benefits to the hospital. But immediately you put, her module what is given is investment in intensive care unit. Now case does not mention about investment in the ICU, but case mentions about WHO support for neonatal units and separate recognition for neonatal care unit. So you quote that benefits may accrue over long term, and that's fact. This is the second difficulty faced while doing the performance appraisal in case of performance measurement in case of the measurement of utilization of funds and expenditure. In case of care hospitals, many hospital services are free. Allocation of capacity is aimed at providing free service to the weaker sections, that is below poverty line sections of the people. Medicines are also provided at discounted rate. Therefore, hospital does not have substantial revenue stream. The point to be highlighted. Purposely, I have not highlighted because now in front of you when I highlight, you understand that these are keywords which we cannot omit. The hospital does not have a substantial revenue stream to earn from its patients. It gets a fixed budget from the state government. Very important point. It gets a fixed budget from the state government. And while the hospital allocates these funds to various investments and expenditures. So when you don't have sufficient revenue generated from the patients, you are dependent upon government to the funding. All the more therefore, appropriation of funds for the correct purpose is very important. That is a key challenge. Assessment whether spending has been appropriate is a key challenge. So this is again you will highlight. This is a drawback or a difficulty faced by an NPO. Spending whether it has been appropriate or not is a key challenge. Defining cost per unit would be subjective since it could be cost of patient arriving at the hospital, cost of patient successfully treated at the hospital. Exactly which cost per patient we are talking about? Cost per patient coming or cost per patient are being treated and discharged. Either figure could be tweaked, means it can be twisted to make it seems that the objectives are being made. So obviously you can twist the figures, you can manipulate the figures as you like. The management may resort to rampant spending simply to meet the expenditure targets. This we discuss. This is the point here. Management may spend a huge amount on certain activities, certain treatments or assets just to show that they have met the expenditure targets. This is the issue of allocation of funds. That next round of charity it will be receiving from the donors. Therefore, non-financial measures need to be put in place, help stakeholders to realize whether the objectives have been met or not. This is the third point, and the last point is about multiple objectives. Not-for-profit organizations have multiple objectives, and it may not be clear which are most important. In this case, hospital aims at providing high-quality treatment to its patient by developing innovative ways to deliver treatment to the patient. Now, both objectives are equally important. There is a tie, T-I-E, tie. Innovate, I means conflict. Is innovation more important or providing better high-quality treatment to the patient is more important? Is innovation more important or high-quality treatment to the patient is? That is a dilemma. It is not defined anywhere. Both are equally important, one may say. Yeah, both objectives are equally important and interrelated. The non-financial measures provide better information about how each of these objectives have been met. Benefits of the hospital are non-financial in nature. Providing fiduciary information, all objectives are therefore non-financial measures only. As far as fiduciary responsibility to the stakeholder, that is the government is concerned, yes, accountability in terms of ROI, profitability, etc. is relevant because government is supplying the funds, providing the predominant portion of the funds. So that accountability, fiduciary responsibility is there to the government. But otherwise, all non-financial performance more important. The answer to first question. The answer to second question is value for money. That is economy, efficiency and effectiveness. Here you will put that question, typical question. Economy means has the desired output, and in this case quality of service has been achieved at lower cost. Has the output been achieved at lower cost? Question. Medical resources at this hospital in terms of doctors. Now here you will put certain figures. Whenever you are talking about value for money framework, make use of that table which gives you financial highlights or other numbers, other data. I would say other financial and other data. Whatever is given to you in the table, make use of that data. Here medical resources in terms of doctors is 80 and much more than higher than the national average of 76 at other centers. Doctors' salaries would be a significant expenditure for the hospital. The average doctor's salary is ₹1,20,000 within the budget figures, as pointed out by Dr. A. Salary is certainly lower than the national average. It is 1,60,000 per month in other hospitals. Here the doctor earns only 1,20,000. So relatively lower levels of salary could be due to difference in the level of experience or that doctors at for care hospital work overtime without getting paid for. That also is possible. Yeah, so all such possibilities. See, like when you do an internal audit or a management audit, now you do the brainstorming and say like this. But ऐसे भी हो सकता है कि doctors are working on overtime and that is why they are paid less. Probably they are getting higher OT and therefore the same scale is kept at a lower level. Probably. Or the satisfaction or maybe they are getting paid overtime or also because there is a difference in the level of experience. Some doctors may be having less experience and therefore the overall we don't have complete details, so we are unable to comment. Therefore, keep it open-ended. Whenever such data is incomplete, to keep the discussion open-ended. Leave it for the reader to decide based on the factual data. This may be one of the reasons why staff satisfaction is only 16% compared to 86% in the other centers. Basically, that is the burning issue. That is the burning issue when satisfaction level morale is so high, 86% in other hospitals. This hospital it is only 16%. एक तो salary level बहुत कम है and that is low cost. From hospital's point of view, it is economy. That is low cost. But is the output achieved, desired output achieved at low cost? Certainly the answer is no. Efficiency की बात करते हैं. Has maximum output been achieved with the minimum resources? I don't think that is the correct answer. Somehow the hospital is not in a position to generate that output in terms of treatment being provided to the patients, making use of minimum resources. So treating patients is the key objective. or while doctors are the main resource to deliver it. Number of patients treated is a good measure of efficiency achieved. You have achieved efficiency of 84,000 पेशेंट्स आप दोनों को फिगर ऐड कर सकते हैं इन हाउस एंड आउट पेशेंट दोनों ऐड करोगे तो 84,000 पेशेंट ट्रीट किए नेशनल एवरेज इज ओनली 69 जो मैं बोल रहा था ना आपको समथिंग बियॉन्ड द नंबर्स समथिंग विच इज बियॉन्ड द गिवन डेटा सो यू हैव टू पुट समथिंग न्यूली बेस्ड ऑन द गिवन डेटा सो दिस इज समथिंग विच इज एडिशनल थिंग यू हैव प्रोड्यूस्ड 84,000 आया कैसे इन हाउस पेशेंट प्लस आउट पेशेंट इतने पेशेंट को ट्रीट किया while national average is only 69,000. In terms of number of patients treated, that is a good measure of efficiency. It has 80 doctors compared to 76 average. That is also good efficiency. So each doctor treats how many patients. You can work out direct ratio called doctor-patient ratio. Remember in your module, we had a case study of that case study of a school, right? Which where we discussed the ratio called parents, teachers, rather the teachers and the student ratio. We discussed that each teacher should cater to around 30 to 40 students. And at a school level, even if the ratio is further low, better it is. You are able to focus on the children. So teachers and students ratio. So here we talk about patients and doctors ratio. Doctor is catering to 1057 patients as compared to 917 patients in other centers. So resource utilization of its pool of doctors is higher. And there is no enough funding to hire more number of doctors and paramedical staff. Therefore, there is a constraint on the limited resources of doctors. This might be the reason why each doctor works longer than his colleagues at other centers. आप सब data इकट्ठा कर रहे हो एक साथ and you are generalizing. That is about efficiency. And third point is about effectiveness. Their waiting point or waiting time also you can highlight that waiting time for the patients is much higher and this also increases it has impact on the effectiveness of service provided and it is a hidden cost. See, if the patients have to wait for a long period of time, then there is a hidden cost that needs to be taken into account and also has to be highlighted in efficiency. So efficiency we say number of doctors are limited. But number of patients treated are much more. So efficiency of doctor is higher and that is why probably they are working in overtime also. But at the same time, it is countered. Contrary effect is waiting time of the patient is also very high. So दोनों side से बात करें. And last is effectiveness. Has Orchid Hospital achieved its mission or objective? Now this is something which is dicey. Just to say yes or no categorically is difficult. So we comment like this. Hospital has the objective of providing high quality medical service to its patients. Better quality of treatment would ensure ailment within a short possible time that should be minimal. And you are readmitting the same patient for the same disease in the same hospital within a short span of time, that is not done. What kind of service you are providing to them? That number is very high in case of this hospital. 27 vis-a-vis 627 vis-a-vis 128. Very high. Assuming such readmissions to be in-house patients, the rate of patients for medical care for the same ailment within a short time is just 7.50%. 7.50 as compared to national average of 2%. So this is something which is a computed figure, derived figure. So you will calculate how many patients are admitted totally and out of that how many are readmitted. So 7.5% patients are readmitted in this hospital vis-a-vis 2.01, very high. Medical treatment can also be questioned since waiting time of the patient is long. 2 hours 20 minutes से 3 घंटा बढ़ गया. So we are not able to provide prompt service. That point also can be highlighted. See, highlight these points in bullet form. This example in this commentary it is given in narrative form, but you can highlight in the bullet form. This is very qualitative analysis what we are doing. Prompt medical treatment. Medical treatment. That is not happening. So are we then talking about effectiveness? Question mark. Senior Dr. K points out that time spent on delivering innovative care to patient over staff. So that point is also well taken, well noted. All this would have resulted in dissatisfaction among the patients whose survey indicates a score of 6 against national average of 9. So क्या करना है? Overall objective is meeting the patient's requirements, giving them the satisfaction level which has to be high. Here it is only 6 vis-a-vis 9. So effectiveness is something in the eyes of the other person. You and me, we cannot say that yes, hospital has been providing its services effectively. The patient who is at the receiving end should say that services have been effective. That is not happening. Summarize, we say, Care Hospital is achieving the economy. All costs are kept under control by maintaining lower salary for doctors. Outreach to patient is also high as compared to national average, but due to limited availability of resources, doctors and staff is overworked, overburdened. So while it does well on efficiency aspect also, economy aspect well, efficiency aspect well done. We give a certificate, economy well done, efficiency well done. But when it comes to effectiveness, that is not done properly at all. It comes with a hidden cost in terms of dissatisfaction. To highlight this point, hidden cost, and that is dissatisfaction level of patient, dissatisfaction among the patients and employees both, and low quality of medical care. Therefore, medical treatment is not effective, which in turn obviously affects the value for money framework. Value for money framework means economy is in place. You are appointing less number of doctors. The patient-doctor ratio is also very reasonable as compared to budget. As compared to budget. Each doctor is catering to so many patients. That way, cost is kept minimal. Doctors are meant to work overtime. They are pressed and they are hard pressed and overwork they are doing. But somehow, economy maintained, efficiency achieved, but at the cost of effectiveness. That is the conclusion. Value for money framework, which is answer to the second part. Third part, of course, proposal to introduce nominal fee for outpatient treatment given to poor people. Here, we can say that the given problem seems to suggest that this paragraph is about the data which is given in the case. Right? That data we can reproduce as it is once again for a benefit of understanding. But yes, you should mainly answer the question: should subsidy given to the patient, subsidized rate charged to the patient, should they be withdrawn? Should subsidy be withdrawn? Should subsidy be withdrawn? The given problem seems to suggest that severe constraints in the resources available to meet the objectives and thus impacting effectiveness of the treatment. Doctor treats around 1057 patients in a month as compared to the national average of 917 in a month. Number of patients, outpatients is much more than the national average. Overworked doctors combined with limited staff is the main hurdle that this hospital is facing. So somehow the objectives are not being achieved. The objectives in terms of satisfaction level is very poor as far as this hospital is concerned. Therefore, generating nominal fee to achieve its objective would not help its purpose. Nominal fee आप कब charge करो when customer is happy, customer is satisfied. When your patients are not satisfied, satisfaction survey shows that only average satisfaction level of 6 vis-a-vis 9, and overall your doctors are not happy, paramedical staff is not happy. Overall system is not working in favor of its objectives. Then why to increase the fees? Why to start charging nominal fees? Why to reduce the subsidy? Why to withdraw the subsidy, etc., etc. Instead, just by saying that this is not correct is not going to suffice. You have to also highlight then what is correct course of action. Alright, that is not correct. Then, withdrawing subsidy is not a correct measure in this particular situation. But then which is the correct measure? Instead, so this is important, it can apply for a higher budget allocation, and that too from government, or funding, or providing extra facilities, say increasing level of satisfaction among the doctors, appointing additional staff, better facility for service to the subsidy if you are not, if you are not withdrawing the subsidy or if you are charging any nominal fee, then money government or extended or expanded budget allocation for this hospital. Then only the resources such as experienced doctors can be appointed or facilities can be provided and go through this, can reduce the waiting time of the patients also, readmission, all the problems will be solved. ऐसा आ जाएगा तो better treatment, lowering the cases of readmission, एक बार ज्यादा नंबर ऑफ डॉक्टर्स अपॉइंट करेंगे तो ट्रीटमेंट विल बी इन अ बेटर मैनर, the pressure will be reduced. So state government may also consider any justifiable future budgetary increments. So we are not management consultant is not right what they are leaving it to the government. Let them decide the amount of increment be given in terms of their budget allocation and overall management of the hospital. Different to the opinions and needs. 4-5 डॉक्टर के कमिटी ने बोला है, but management is CEO is saying चलो withdraw करो subsidy or provide additional start charging some nominal fee to the patient. This is not done. CEO's decision has a very short-term outlook. This is the conclusion. CEO's decision has a short-term outlook that doesn't correlate with the organization's objectives. Overall organization's objectives are not short-term outlook. You are trying to offset a limited revenue stream to achieve its objective. It shows that management style of working, its improvement. First, you are under impression that paisa raise kiya by withdrawing the subsidy or by starting charging the fees, nominal fee, you will get the funds and all problems will be solved. That's not correct. The only reason that you need much more bigger funds than this. So government support is important. Satisfaction will be at stake if you start charging them the fees. So suddenly you are deviating from your standards. That's all, friends. We have completed this case. It was a narrative case in terms of value for money framework for a not-for-profit organization. A very descriptive case. Now you have case studies in the question paper which are sometimes relating to such qualitative or non-financial performance measures, and therefore here numbers are not that important, but still whatever data is given in the question, we try to make use of that and correlate. See, I understand I'm putting like this, correlating, this is mapping the data, and this is the last point I will write over there in my notes on case study which we discussed. Recollect, we had written down some points in the case study, how to approach. There I will continue. Here you what if analysis. Here you have to write that data which is given correlating or mapping is very important. Mapping of data, this is the point of learning. Mapping of data given in the case. Mapping of data given in the case. Yes, points. Over. हो गया नहीं हो गया एक सेकेंड मैपिंग ऑफ डेटा गिवन इन mapping of data given in the case with the points, strategic points, that is what I want to mention. The strategic points raised by you is very important. Data given in the case of numbers has to be correlated or mapped. So mapping or correlating the data. Correlation. This we are highlighting as learning points. See why I have jotted down these learning points. These are important learning points emerging out of a case. In any case, it may not be applicable in a particular case, but certainly any other case also it may be applicable. In this case, we have done the mapping and correlation of data. All these 3 points, this is the third point of learning from today's case analysis. Friends, for your patience, I will end the session over here, and 2 or 3 more cases on performance evaluation we will take in the next class. Thank you very much.